exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Price of gasoline,
Bringing you up to the minute news whenever and wherever you have. I'm Haslinda Amin in Bangkok.
Good morning to your Daily Show. I'm Neil Freiman.
And I'm Toby Howell.
Today, Target is channeling Fund 101 to turn around a miserable stretch.
Then McDonald's and Burger King are beefing over
just too much uncertainty about these larger narratives.
That we see them walk out of that door.
Coming up this Sunday.
right now is what is happening. For the struggling retailer. Its comparable sales fell 2.5% in the quarter, marking the 13th consecutive quarter of weak or falling sales. Net profit was down 5.1%. Number of shoppers down as well. Everything was falling, everything except its stock, which rose nearly 7%. Why? Because new CEO Michael Fidelki took over on February 1st after starting his career as a Target intern back in 2003. And now he's rolling out a $6 billion plan to make Target competitive again. He's allocating $2 billion towards revamping stores, including sprucing up some locations which haven't seen a facelift in 15 years. The in-store experience will be guided by the framework of Greet, Help, Thank, which is the LinkedIn version of Eat, Pray, Love. Then he wants to do a category-by-category overhaul from home goods to apparel to grocery. For instance, by June, Fidelki hopes to turn over 75% of Target's home decor lines to recapture some of that knick-knack magic that it used to channel. In short, Target doesn't want to be known as an everything store anymore, according to Fidelki, but is instead betting on busy families to drive its turnaround. Neil, sort of an odd framing there, but is he on target?
Solomon.
Well,
looks like POTUS got him twice. Their Navy, not a factor. Pick your adjective, it is no more. In fact, yesterday, in the Indian Ocean, and we'll play it on the screen there, an American submarine sunk an Iranian warship that thought it was safe in international waters. Instead, it was sunk by a torpedo. Quiet death. The first sinking of an enemy ship by a torpedo since World War II. Like in that war, back when we were still the War Department, we are fighting to win. Also, yesterday, the leader of the unit who attempted to assassinate President Trump has been hunted down and killed. Iran tried to kill President Trump, and President Trump got the last laugh. Now, this is not a mission accomplished situation. This is simply a reality check. The combination of U.S. and Israeli intelligence and combat power will control Iran, and will control it soon. Sure, Iran will still be able to shoot some missiles and still be able to launch one-way attack drones at civilian targets, and their proxies will attempt to attack our embassies, bases, and Saudi Arabia, and they need to target civilians because they can't fight toe-to-toe. But we will find them, and we will kill them. This is what the fake news misses. We've taken control of Iran's airspace and waterways without boots on the ground. We control their fate. But when a few drones get through or tragic things happen, it's front-page news. I get it. The press only wants to make the president look bad, but try for once to report the reality. The terms of this war will be set by us at every step. As I said Monday, the mission is laser-focused. Obliterate Iran's missiles and drones and facilities that produce them, annihilate its navy and critical security infrastructure, and sever their pathway to nuclear weapons. Iran will never possess a nuclear bomb, not on our watch, not ever. And this is why President Trump's moral clarity on Iran today is so vital. Unlike the past, where vague red lines and endless negotiations let Iran fund terror and inch ever so slightly toward a bomb, this president sees the threat plainly and acts decisively. No more half measures, especially when Iran is at its weakest. No more letting Tehran play for time while our people pay the price. His leadership ensures that we finish what we start and that we protect our warfighters by crushing the enemy before they can strike again. Our offensive operations, refined through months of relentless preparation, are unstoppable. And our defensive efforts are unprecedented. We have from the start put the protection of our troops ahead of everything else. Before we very publicly built up offensive combat power, we quietly ensured that our defensive posture and power was in place. And as we built up offensive combat power, we moved the vast majority of American troops, over 90% of Americans that were on our bases, what we say off the X, out of the range of Iranian fire. Our defensive shield is equally formidable, the most sophisticated air and missile defense network ever fielded. Thousands of Iranian missiles and drones have been intercepted and vaporized. Tens of thousands of American and allied lives protected. We have pushed every counter-UAS system possible forward, sparing no expense or capability.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
Welcoming your family members home at Dover in the coming days. Out of respect for the other families, we'll withhold the release of their names until next of kin notification is complete. And either myself or Admiral Cooper will release those names as soon as we can ensure that all of those families have been properly notified. To our Gold Star families, to our wounded warriors and their loved ones, we will never forget your sacrifice. Our nation stands with you, and we are eternally grateful for your courage, your resiliency, your devotion to this mission and to our nation. As the Secretary said, we're 4 days in, 103 hours into this campaign. The operation was again launched with clear military objectives designed to dismantle Iran's ability to project power outside of its borders, both today and in the future. First, we are targeting and eliminating Iran's ballistic missile systems to prevent them from threatening the U.S. Forces, partners, and interests in the region. Second, we are destroying the Iranian Navy, degrading its capacity, capability, and ability to conduct operations, not just in the Central Command AOR, but as the Secretary showed in the video, around the world. Third, we're ensuring Iran cannot rapidly rebuild or reconstitute its combat capability or combat power, and those phases will begin as the campaign continues. As of this morning, U.S. Central Command is making steady progress. Iran's theater ballistic missile shots fired are down 86% from the first day of fighting, with a 23% decrease just in the last 24 hours. And their one-way attack drone shots are down 73% from the opening days. This progress has allowed CENTCOM to establish localized air superiority across the southern flank of the Iranian coast and penetrate their defenses with overwhelming precision and firepower. We will now begin to expand inland, striking progressively deeper into Iranian territory and creating additional freedom of maneuver for U.S. forces. Let me explain a little bit about how we're thinking about staying ahead of the enemy. First, over the past several weeks, Admiral Cooper and the CENTCOM team have refined their operational approach to the region. Their planners identified key centers of gravity that would allow Iran to project power outside of its borders. They thought about how to isolate critical vulnerabilities and determined where, with precision, the greatest strategic effect could be achieved. As a result of this, CENTCOM is now shifting, in day 4 already, from large, deliberate strike packages using standoff munitions at range outside an enemy's ability to shoot at us, now into stand-in precision strikes overhead Iran. As the Secretary said, this is a point of munitions transition from standoff munitions to stand-in munitions like Joint Direct Attack munitions, which are GPS-aided free-fall weapons, and other things like Hellfires, etc. This will allow the joint force to deliver significantly increased precision effects on the target. The throttle is coming up, as the Secretary said, as opposed to ramping down. This will allow us to maintain consistent pressure on the adversary over the coming days, disrupt their launch timelines, and impose cost every day around the clock. I know there have been a lot of questions about munitions. We have sufficient precision munitions for the task at hand, both on the offense and defense. But I want to tell you, teammates, as a matter of practice, I don't want to be talking about quantities. And I know there's been a great debate about that, and I appreciate the interest, but just know that we consider that an operational security matter. Let me flip to the map here. Hopefully I don't kill anybody with a laser pointer. As I mentioned earlier, and for you with the camera right there, my friend, I hope I don't ricochet off and hurt you. Over the initial days, the U.S. Joint Forces continued to attack and attrit ballistic missile capabilities as well as integrated air defense capabilities along the southern axis. Along the northern axis, Israel and the Israeli Air Force has predominantly been working integrated air defense targets along the northern flank, as well as medium-range ballistic missile capability as well. From the sea, the USS Ford has continued to project combat power here, as well as the bomber pulses that we talked about in the opening days of this briefing. Along the southern axis, the USS Abraham Lincoln Strike Group has continued to provide pressure from the sea along the southeastern side of the coast and has been attriting naval capability all along the strait and up into the Arabian Gulf at a size and scale sufficiently to address the targets required. To date, we've hit over 2,000 targets, as Admiral Cooper said in his video last night. We've destroyed more than 20 Iranian naval vessels, including, in addition to the frigate outside of the area, one submarine, and effectively neutralized at this point in time Iran's major naval presence in theater out there. As the Secretary showed the video, for the first time since 1945, a United States Navy fast attack submarine has sunk an enemy combatant ship using a single Mark 48 torpedo to achieve immediate effect, sending the warship to the bottom of the sea. I want to remind everybody that this is an incredible demonstration of America's global reach. To hunt, find, and kill an out-of-area deployer is something that only the United States can do at this type of scale. Over the next 24 to 48 hours, CENTCOM will continue to strike infrastructure and naval capability, and we'll continue to assess our progress against the military objectives. It does take time for us to collect that information and to assess en route. Much of our intelligence, surveillance, and reconnaissance capability is currently hunting and killing ballistic missile launchers and one-way attack capability. We're precise in that assessment, and we call balls and strikes in that assessment. We take that matter seriously. Iran, on the other hand, has been indiscriminate and more imprecise in their attacks. They fired more than 500 ballistic missiles and more than 2,000 drones, striking innocent civilian targets throughout the region. Our partners are answering the call to defend themselves right alongside us. Jordan, Bahrain, Saudi Arabia, the UAE, Qatar, and Kuwait are all defending their people with their own combat capability, with precision and restraint. Jordanian air defense crews recently intercepted a cluster of Iranian one-way attack drones headed to Amman. Bahrain's air defense forces shot down an inbound drone approaching Manama's maritime infrastructure, protecting both their population and critical shipping lanes. Saudi Patriot batteries stopped a salvo of ballistic missiles aimed at energy facilities near Dhahran. The UAE neutralized multiple drones targeting Abu Dhabi's industrial zone, demonstrating speed and precision. And Qatari fighters for the first time have shot down 2 Iranian bombers that were en route to their location. Together, these nations are helping to defend themselves and project power as required against the enemy. We're 100 hours in. It's still very early, as the Secretary said, but the balance is shifting. We've always got to remember that these operations are complex, dangerous, and far from over. Our soldiers, sailors, airmen, Marines, Guardians, and Coast Guardsmen remain in harm's way, and we must be clear-eyed that the risk is still high. This is combat. Let us never forget this. As we continue, I ask that we hold all of our deployed teammates in our thoughts, those standing the watch, flying the sorties, sustaining the fight, and carrying our nation's burden. And I'll stop where I started, and that's remembering our 6 fallen who will return home as soon as possible. I remain humbled, grateful, inspired by every day the valor and professionalism of our joint force. They are quiet professionals through and through, out there doing America's work through the day and through the darkness. And with that, I'll take your questions along with the Secretary.
We've been tracking the press briefing at the Pentagon down in Washington, D.C. We'll continue to track the headlines that come out of the Q&A portion of that conference, alongside the U.S. Secretary of Defense, Pete Hegseth, there, alongside General Dan Kane. 2 notable headlines that came out of that. One from the Defense Secretary, that U.S.-Israel have complete control of Iranian skies. And 2 from General Dan Kane, the U.S. is shifting from large to precision strikes over Iran.
As they do get complete control over the skies. The initial move in markets seemed to suggest that people were taking the General and Pete Hegseth at their word, frankly, discussing exactly what would happen and getting some comfort from that. Still some questions, and I'm sure that they'll be getting them, about what the goals are in terms of not just eliminating the nuclear threat, but also exactly what they would like to constitute the government or the establishment to prevent any kind of reestablishment of the nuclear program in particular.
It's fair to say this is a fluid situation. So far, going into the cash open, futures are still positive by a third of 1% on the S&P. Likewise on the Nasdaq. In the bond market, bond yields look like this. Yields are higher by a single basis point on a 10-year. We did get an ADP report out just moments ago. That was an upside surprise. And an update on the move in energy. Crude, slightly negative. We're down by 0.2%, but still in the 80s on Brent. Brent crude at 81.21. With us around the table, tracking that briefing, Mira Pandit of JP Morgan Asset Management. Mira, good morning.
Good morning.
What are your thoughts on the shock over the weekend, how things are developing and what it means for your world?
Seeing that press conference, you are seeing that we are projecting power and strength and control, which I think is a calming factor to the markets. But the reality is there was also a comment about as long as it takes to succeed. And that is the biggest concern for the markets of how long does this go on? And perhaps there is increasingly going to be some separation between how long does the conflict continue and is there some liquidity fluidity through the Strait of Hormuz that just gives us enough relief to put a little bit of pressure off of markets. But overall, as we take a big step back and, we continue to debate, is this days or weeks or months or years, ultimately from our perspective now, thinking about more of the weeks calculus here, our expectation is that it will be modestly inflationary, but likely not stagflationary, because you still have the benefit of timing here around the One Big Beautiful Bill Act and the stimulus payments to consumers and taxpayers, which essentially will alleviate some of this pressure if we have upward oil prices, which so far have been relatively well contained. But you do think about some of that putting a bit of upward pressure on inflation. Now, as it is, we were expecting that inflation would peak about 3% or more by the midpoint of the year, given tariffs, given elevated tax refunds driving up demand and therefore prices. So this reinforces that view, but I don't think it makes it a step function worse yet.
This is one of three risks we've discussed all morning on this programme, the other two being AI disruption and the credit jitters. Do you see those risks accumulating into an index-level threat? Because at the moment, around 2% away from all-time highs, it looks like we're doing OK.
We are experiencing somewhat of an index-level threat as it is, because even though we're roughly flat on the S&P 500 and have skirted around that for the most part of the year, you do see that tech is still down 5 or 6% year to date. And yet, on the other hand, you have 5 different sectors that are up double digits year to date. And again, this isn't 2022 where it's just energy that's being the big driver here. You're still seeing industrials, materials, consumer staples as other big winners so far this year. So you have seen that rotation. It's just challenging in such a concentrated index where tech has been such a big part of it to see those stocks look a little bit weaker. But ultimately, I still think it's a rotation around AI from who are the innovators and around technology to who are the beneficiaries of that CapEx and where is that infrastructure layer coming in. Again, it's just a little bit less of a weight in the index to have that power to drive it forward. But very much the conversation around AI has flipped from are we overestimating AI and is it a boom and soon to be a bubble to are we underestimating the power of AI? So we continue to cycle through these different existential fears, which does create an issue for the markets ultimately that I think we'll look back on in 2026 and say it was this tension between sentiment and fundamentals, where the fundamentals within the market this year and so far in the economy still look strong. But the sentiment clearly is anxiety-ridden.
Well, I guess to build on where John was going with this, part of the issue that people have this morning is the first part of what you were talking about, which is the inflationary aspect of this. It wouldn't be stagflationary. It would be inflationary, which potentially could really create an obstacle for the Federal Reserve to cut rates even once, let alone twice, and could potentially pressure some of the credit jitters that we've already seen that are working their way through the system. How realistic do you see that? A tightening in financial conditions due to the inflation that could dampen some of that growth that you were talking about?
Relative to 2022, I think this time around we do have to separate headline and core inflation. Because if you do see headline inflation a bit elevated, but core inflation is still experiencing some of these disinflationary trends, then the Fed still may feel comfortable putting in a cut, especially depending on how the labor market continues to shape up. Relative to 2022, what we forget is, yes, there was an inflation spike, but it was all across the board. It was not just the oil prices and the food prices related to geopolitics, but also you still had very strong core goods prices, very strong services prices, which we're not seeing to that same extent today. So there was no room for the Fed to do anything other than stay in one direction, hiking rates, whereas this time around we do have core inflation potentially looking a little bit softer in the back half of the year.
Sometimes when the threat is big enough, the decision is obvious. And right now, I don't think the decision is that obvious for the committee at the Federal Reserve.
Which makes it that much more difficult given the fact that they have a hawkish bias. That's what we heard earlier. Based on what we saw in 2021 and 2022, they were burned by inflation. They don't want to be burned again.
Mira Pandit at JP Morgan Investment Management. Mira, good to see you. Thank you. I mentioned that ADP number dropping just moments ago. Upside surprise 63K, the estimate 50 with the details. Mike McKee has more. Good morning, Mike.
Good morning, John. Well, it's kind of interesting because ADP, you've seen the numbers, found 63,000 new jobs for the private sector. And the consensus so far for non-farm payrolls of economists we've surveyed for private sector jobs is 65,000. So very, very close. However, remember last month, 172,000 private sector jobs were created, and ADP's revised number for last month was 11,000. So big miss last month. We'll see if they're any closer this month. They do show of that 63,000, 58,000 are in the healthcare area. So that hasn't changed. The sectoral dispersion of job creation is still very, very narrow out there. In terms of the payroll situation for job changers, 6.3%, that's down. Job stayers get a change of 4.5%. That's unchanged from the month before. So still no price pressures or wage pressures out there.
Mike McKee, thank you, sir. Looking ahead to the payrolls report on Friday, the next big stop for the labour market debate. The bond move continues, yields slightly higher for a third consecutive day, inflationary fears making a comeback, and some people out there trimming Fed rate cut bets. Federal Reserve Governor Stephen Miron, I'm pleased to say, joins us around the table for a conversation about that and a whole lot more. Governor Miron, good morning.
Good morning. Thanks for having me.
Thank you for being here, sir. Let's start with the shock over the weekend. What is the prudent response for policymaker confronting a shock like the one playing out in the Middle East?
Well, at the moment, I think it's too early to sort of have any firm views as a result of that. Oil's gone up a bit, but the bigger question is, does oil stay up or does it come back down? And that, of course, will depend on how things play out. But even that said, even if oil stays at these types of levels, to me, it's difficult to get a lot of read-through as a result of that. Sure, oil will feed into headline inflation, but the evidence that it feeds into core inflation in any sort of material way, unless there's a huge move in oil prices, I think is quite limited. So it's difficult for me to get very excited about a policy implication of what's happened thus far.
So some people who come on the programme spoke to Lisa and I and said these Federal Reserve officials might be conditioned by the post-pandemic experience coming out of 21 into 22 and the inflation spike then and the energy shock that developed at the time emanating in Russia. Is this different? Are we in a different place?
I think it is. I think that attitude is a little bit of fighting the last war. And I think that the Federal Reserve for decades has had the view that, that headline inflation shocks like oil are best looked through, and you sort of focus on core inflation because it's indicative of where inflation is going to go in the future, and you focus on the labor market. And that type of reasoning leads you to look through an oil shock. Now, of course, what happened in 2022 was a bit different because the other policy settings were different, right? Don't forget, monetary policy was as expansionary as it had ever been at the time. Fiscal policy was injecting trillions of dollars into an economy that was recovering thanks to vaccines and medical improvements and COVID passing on its own. And so the policy environment was very different. And so it was very easy for a slightly inflationary shock to feed through into the broader economy and create this type of persistent inflationary problem that the Fed dealt with. We don't have that right now. We don't have fiscal policy that's slamming on demand. In fact, if anything, supply is moving out quite aggressively, and monetary policy is still modestly restrictive in my view. So the policy settings, the economic environment is different. To focus on that, as you described a moment ago, to me, is fighting the last war. That was a unique circumstance.
At the same time, some people have argued that the January jobs report raised a question about just how weak the labor market actually was. Even Governor Chris Waller came out and said, okay, now it's a coin flip for whether we should cut rates at the March meeting. If we do get confirmation of that strength with the February payrolls report that we get on Friday, would that make you rethink whether March was an appropriate time to cut rates?
So look, for me, we've got 2 years of a trend, 2+ years of a trend of gradually weakening labor markets that sort of set in 2023. It's way too early to reject the notion that trend continues based on 1 or 2 labor market reports. And when you look at the totality of labor market data, there's still evidence to me that it needs more support from monetary policy. When I look at things like employment levels of young folks and folks without college degrees, when I look at people who are unemployed for long periods of time, long-term unemployment, to me that's indicative of there still being slack in the labor market that monetary policy can accommodate. So I think it's too early to reject the notion that a 2+ year trend is is over on the back of one print.
Are you concerned, though, that right now the market is moving the way that any rate cut would be perceived as heightening long-term inflation pressures, just by virtue of some of the supply shocks that we're seeing, and frankly, the fact that people do see strength reemerging in certain pockets of the economy? I mean, how worried are you that a rate cut in March could be potentially counterproductive and cause the long end of the yield curve to rise?
Yeah, so if you saw evidence in inflation markets that markets were concerned about long-run inflation expectations, that's the type of thing that would give me pause. But I don't see evidence of that so far. Short-run inflation expectations have come up quite a bit when you look at CPI swaps, but that's just because of the mechanical read-through of oil prices into headline inflation. When you look at longer tenors, there hasn't been much of a move. And so as a result, I don't get the impression the market is concerned about long-run inflation expectations.
You've used this phrase modestly restrictive a few times in this conversation already. What is modestly restrictive to you? Can you put numbers on that kind of thing?
Yeah, I think we're probably about a point above neutral now. And so my view is that we ought to start by getting back towards neutral. So
the 100 basis points in reductions you want this year is not to become accommodative. You believe it's to get back to a neutral setting?
Yeah, pretty much.
What would it take for you to start thinking about the need to get accommodative?
So I would want to start thinking about inflation coming in below the target, which is a risk that I've highlighted. If I end up being, you know, I've emphasized
housing. What's the source of that risk, Governor? What would be the source of that risk to get below target inflation?
Sure. I've emphasized housing markets a lot, that I'm expecting a faster convergence down of renewal rents to new rents, which will lead housing inflation to converge quickly to new rent levels. And there's reasons for that I've talked about at length. I don't need to repeat them here unless you want me to. But if I end up being right about housing and wrong about tariffs, and so I've also argued that I don't view tariffs as driving goods inflation. You know, I don't view that because imported good prices are not inflating faster than all good prices, which is what you would expect to see. And given that backdrop, I don't view tariffs as driving goods prices. So if I end up being right about housing and we get a sharp deceleration in housing this year because of quirks of how housing is measured and because of dynamics of renewal rents versus new rents, and I end up being wrong about goods prices and goods inflation comes down quickly over the course of this year, then we're going to undershoot. Our target.
And you think that's a risk we need to get ahead of?
No, I'm not saying we need to get ahead of that. That would get me to argue we go below neutral.
That's the conversation we're having about how preemptive you might need to be in a moment like this, when others on the committee are thinking, let's wait and see what happens. Lisa was asking, how would you vote at the March committee meeting? Is this a moment to wait and see or a moment to act?
No, I think it's a moment to continue acting. I have projections for unemployment. I have projections for labor market. So do for inflation. So do my colleagues. And I believe it's appropriate to continue acting in accordance with those projections until you get evidence that you have to change your projections. And thus far, the evidence from events over the weekend haven't led me to change any of my forecasts for the labor market for inflation over the medium term. So it's too early to respond to them.
You said that you think that the neutral rate is a point below the 3.75 where we currently are, and I'm just wondering how quickly you think it's important to get to neutral based on the uncertainty, based on the disagreements that people have about A, where neutral is, and B, how things are going to transpire.
Yeah, so last year I was voting for 50s because we were higher away from it. And then as we made progress cutting and getting closer towards neutral, I felt it was appropriate to say, okay, moving in 25 clips. I'd prefer to still continue moving in 25 clips until we got to neutral and then to reevaluate. Because at the end of the day, I don't see an inflation problem in the United States. Now, of course, if we get evidence that what's happening in the Middle East is bleeding through into broader inflation, then that would change my mind. But thus far, there's no evidence.
Quickly, Governor, what would that evidence look like? What would you look for specifically?
I'd look for inflation expectations starting to move as a result,
market-based or consumer-based?
I tend to think that the market-based ones are more important to me, or evidence the economy is starting to, in some sense, overheat again. Then I would be comfortable sort of changing that view and moving even more slowly. But at the moment, you know, I see it as appropriate to continue cutting.
Do you have any company on the committee?
You know, I can't speak for anyone else, and I think most people probably end up sharing my view that it's too early to draw dramatic conclusions as a result of what's happening.
But they come into a very different conclusion about what to do as a result of not drawing conclusions. They say, okay, well then don't move. You're saying keep moving. So I mean, that's
they started in different. Everybody is. I think people are generally where they were last week, right? And it's just too early to change your mind based on what's going on. My forecast for inflation and unemployment, in my view, call for continuing interest rate cuts. other people disagree, you know, and so they also haven't moved yet. But as we get information, they'll update.
Two more things to work through.
Yeah.
So the credit jitters one and AI another. I want to squeeze them both in if we can. So let's start with the AI jitters. So Block, a fintech company, came out in the last week or so and cut almost half of its staff. And they said they're making a massive AI productivity bet. As a policymaker for you, do you consider that noise or signal? What is that?
So that's one company. It's indicative of what you could have more of. But this is how productivity gains in technology work. They allow you to produce more with fewer inputs, with fewer resources. And so if you were able to produce the same amount with fewer workers and less capital, then your productivity goes up. That frees those workers not necessarily into unemployment, but to do other work. And this has always been the story of human technological progress and the human economic growth. We create new technologies, they destroy some jobs, and then they create new jobs. They free people to do new activities.
You don't think it's different this time?
You know, I don't have a reason for, like I said before, you know, it's too early to reject a two-year trend of labor market moving in a gradual cooling direction. It's too early to reject a tens of thousands of years trend of how technology works in the economy.
We've talked about these sources of risk, and one has been the geopolitical problems. This is another too, and the third one is connected in some cases to what's happening with AI. It's also the credit jitters as well. So this raises the question about potential financial risk for you and the committee. How are you thinking about things as they develop?
But just one last point on AI. Even as AI destroys old jobs and creates new jobs, that is the type of job transition that is typically accommodated by a central bank, right? You don't want to prevent the new jobs from being created by having policy that's too restrictive. If you have an increase in job loss due to new technology, you have to accommodate that and allow the new jobs to get created instead of preventing it.
Do we need to support what's developing in credit?
I'm sorry?
Do we need to support what's developing in credit?
So look, you know, I am, like with events in the Middle East, I'm not at the point where I have a strong read-through from what's going on in credit into the economy. I'm not at the point where I think there's any sort of policy response that's necessary or adjustment to forecast that's necessary. One thing that I think is interesting about what's going on in credit is, to me, it highlights a potential shortcoming of our financial conditions indices. We've got a lot of people who argue it's inappropriate to cut because financial conditions are so loose. They've been arguing that for a long time. But one hypothesis of mine that I'm exploring is that those financial conditions indices aren't showing you what's going on in private credit because you don't get the marks for them. And to the extent that private credit has been a major driver of credit growth over the last half decade or so, that's missing from the financial conditions indices. So when we get these jitters in private credit markets and then say, oh, financial conditions are so loose, it's just because we've decided not to look at the part of the financial markets that are tight.
So do you think we are seeing an unwarranted tightening of financial conditions so far?
Well, you know, sort of unwarranted is a bit of a heavy load, but I do think I would be cautious about concluding that financial conditions are so loose when you're getting these things happening in private credit markets.
I just want to ask, have you talked to President Trump recently?
Not since I resigned.
Not since you resigned. I'm just wondering how difficult it is to conduct policy with a huge unknown hanging over the committee about who is going to be the next Fed chair and what this process is going to look like past April.
Well, I mean, I think we have a pretty good idea of who's going to be the next Fed chairman. We don't have a good idea yet of exactly when he will become the next Fed chairman, but I'm hopeful that we get that type of clarity soon. I think it would be great to have that type of clarity.
Governor, is it weird being on the Federal Reserve and not knowing when you're going to exit? You're just sort of like there with an open-ended calendar on what's going to happen next.
It makes it difficult to plan.
I bet it does. For personal reasons. Governor, it's good to see you.
Thanks for having me.
Thanks for making time for us. We appreciate it. Governor Stephen Murrin there of the Federal Reserve, responding to a range of issues, and we keep going back to the same three: geopolitics, credit, and AI disruption.
And at what point do they intersect? And are we starting to see a little bit of connection between the three? It will continue to be the question.
Let's turn to the financial markets then and get you an update on things. Equity futures right now, the S&P 500 positive by 1/3%. In the bond market, yields slightly higher, 10's up by almost a basis point, just north of 4%. And in the commodity market, crude slightly lower, down by 1/3% on Brent to 81.15. With an update on stories worldwide this morning, let's get to your Bloomberg brief. Yahira has more. Hey, Yahira.
Hi, John. ADP data showing U.S. companies added the most monthly jobs in February since last July, an encouraging sign for the labor market. Private payrolls came in at 63,000, well above estimates of 50,000, and a big rebound from January's total of 22,000. Service-producing jobs accounting for the bulk of the figures, with 47,000 jobs added. Meanwhile, Defense Secretary Pete Hegseth saying the U.S. and Israeli assault on Iran is accelerating in a press briefing earlier this hour, Hegseth adding the countries are dominating Iran from above.
In under a week, the two most powerful air forces in the world will have complete control of Iranian skies, uncontested airspace. The Iranian Navy rests at the bottom of the Persian Gulf. Last night, we sunk their prize ship, the Soleimani. Looks like POTUS got him twice.
Hegseth also saying the U.S. can easily sustain the fight with a nearly unlimited stockpile of precision bombs. And Goldman Sachs CEO David Solomon saying he's surprised by the benign market reaction to the Middle East conflict. Speaking at Goldman's first ever Australia Week, Solomon saying it will take a couple weeks for markets to truly digest the implications of the situation. We'll hear more from Goldman Sachs CEO on Bloomberg TV at 5:45 p.m. Eastern. That's your Bloomberg Brief. John.
Hey, Yahara, thank you. Appreciate the update. Up next on the program, we'll set you up for the day ahead. Plus, we'll catch up with Bloomberg's Tyler Kendall, the latest from Washington, and Ed Ludlow previewing the president's meeting with big tech executives later on today. From New York City, you're watching Bloomberg TV.
For climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Even if oil stays at these types of levels, to me it's difficult to get a lot of read through it. Sure, oil will feed into headline inflation, but the evidence that it feeds into core inflation in any sort of material way, unless there's a huge move in oil prices, I think is quite limited. So it's difficult for me to get very excited about a policy implication of what's happened thus far.
That was the Fed Governor Stephen Murray. Steve joining us just moments ago, weighing in on Fed policy. In his own words, in many ways, nothing has really changed for the Federal Reserve over the last week, at least for him. If you want to wait, you still want to wait, and if you want to cut, you still want to cut, and that man still wants to cut interest rates. Equities at the moment on the S&P 500 going into the opening bell firmer by 0.4%. Near session highs on the Nasdaq up by 0.6, on the Russell up by 0.8. In the bond market, a little bit of stability, largely unchanged across the curve. 10s at just north of 4% at 4.06%. And in commodities, the highs of the week, the highs of the year were 24 hours ago, 24 hours plus now, at $85 a barrel. Right now on crude, we're pulling back by more than 1%, $80.50. The situation is fluid, the market's volatile, but at the moment we're pulling back from recent highs. On WTI, we're down by 1.6, 73.40. As we count you down to the cash open, here's the trading day. The week ahead looks like this. At 1 p.m. Eastern Time, a White House press briefing. At 2 p.m., the Fed's beige book. 3 p.m., tech executives meeting with President Trump at the White House for a roundtable on power payments. After the closing bell, earnings from Broadcom. Thursday, another round of jobless claims plus results from Costco. And on Friday, the payrolls report is just around the corner. Elsewhere, the U.S. Secretary of Defense Pete Hegseth saying armed forces control Iranian airspace and the operation will move to more precision-guided bombs. Bloomberg's Tyler Kendall joins us now from the White House for more. Tyler, welcome to the programme. What did you make of that briefing 30 minutes ago?
Hey, John, I mean, at this point, it seemed absolutely clear that U.S. officials are intent that this military campaign will be sustained. We heard Secretary Hegseth really emphasize the idea that the U.S. and Israel now have what they are calling uncontested control over Israel's airspace. I'm sure you picked up on this quote, but we heard the secretary say, quote, "We are just getting started. We are accelerating, not decelerating." Now, he did outline that the U.S. feels it has plenty of stockpiles to sustain this fight, something that President Trump himself has emphasized as well, though we did hear U.S. officials decline to specify the quantity, saying that that would be an operational risk. Now, on the operational front, we also heard, as you mentioned, that the U.S. says it's going to go deeper into Iranian territory, and John, that will be the next phase.
Tyler Kendall down in Washington. Tyler, appreciate the update. Also taking place in the nation's capital today, big tech executives heading to the White House set to sign pledges to foot the electricity bill for energy-hungry data centers. Ed Ludlow joins us now for more. Ed, they're going to be on the hook and the pressure is building.
Yeah, they are. Very simply, this president wants the hyperscalers to pay for the energy that they need. Either they pay for it, they build the supply, or they bring it through another mean by localizing the power supply to that data center at scale. And if you go back to last July when the president launched the sort of AI action plan, the emphasis was very much on cutting red tape, deregulation, expedited permitting, allowing those names on your screen to move quickly. But when we came to the State of the Union address, affordability is clearly top of mind. And so there are a wide range of policymakers, utilities, the hyperscalers themselves that argue that if they take on the upfront cost of modernizing the grid and spread the investment over the grid, you could lower the cost of home electricity prices by a few percentage points per gigawatt. But it's very hard to believe in that. When you look at the zip codes on the eastern seaboard where data center capacity has already expanded and what prices for everyday Americans have done in those areas and jurisdictions. But that's the trade-off here. And so the names expected are the hyperscalers, OpenAI, Meta, XAI, etc. And, the president will get them to sign what is a pledge. It is a pledge, and it's called the Ratepayer Protection Pledge. But then they have to take that capital expenditure and do something with it.
Just quickly, where's Anthropic and what's happening?
Yeah, I mean, CBS is reporting that the U.S. military apparatus continued to use their technology over the weekend. But as it stands, the status quo from the president himself is that there is a ban on them as a supplier. So we need some certainty from the company on that. But, they are taking the moral high ground here and clearly have a set of red lines for how they feel their technology should or shouldn't be used. I'd encourage the audience to go and read the Bloomberg reporting on how OpenAI has positioned this, because Sam Altman has been communicating to his employees and publicly about their approach here.
Ed, looking forward to the programme a little bit later this morning. Bloomberg Technology a few hours away. Ed Ludlow there. Coming up tomorrow on this programme, Noel Dixon of State Street, Tom Kennedy of JP Morgan, the Richmond Fed President Tom Barkin, and Michael Gapin of Morgan Stanley from New York City this morning. Good morning. Best of luck for the rest of the trading day. From New York, this was Bloomberg Surveillance.
The BNP Paribas Open kicks off in California. World number one Carlos Alcaraz is a two-time champ at Indian Wells, and after lifting the trophy at the Aussie Open, the Spanish superstar will be the man to beat. On the women's side, Aryna Sabalenka hasn't played on the WTA Tour since Melbourne. She's looking for her maiden title in the desert. And don't forget, you can watch all the action live daily on Tennis Channel.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Nobu-san, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurant opened. He asked me to come to open a restaurant in New York. And beginning, I didn't know what he did there.
You didn't know he was an actor?
No, I don't know what he doing. Because I never watched the movies, I was traveling, the busies. But of course, after, people, hey, Nobu, so you must know him. And then I understand.
How is he as a partner?
He's, for me, and a great partner. He understands to my concept. He support me 100%. But he's a very smart people. Sometimes so strange idea, but it's good idea. So, example, Nobu Hotels idea come from him. He said, "Hey Nobu, so we have a lot of new restaurants coming in somebody's hotel." For him, doesn't make any sense. Then we start the Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. You're good at your job, bro. Like, this is actually the first time anybody's ever asked me that. I'm not here to say what I would and wouldn't do in the future. But the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. But that's where I'm at today.
Up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
Welcome to a special edition of Bloomberg Open Interest. We are live from Bloomberg Invest in downtown Manhattan. I'm Matt Miller.
I'm Danny Berger, and we're gathered here with the most influential voices across asset management, banking, and private capital. And what a day to be having this conversation. It's the two most dominating stories, what impact war has on these markets and the fallout from private credit.
Yeah, absolutely. And we are seeing a bounce in optimism as a couple of stories hit the tape over the last few hours. Number one, a New York Times piece that says some intelligence officials in Iran have tried to reach out through back channels through a third country to the CIA in order to give themselves and the U.S. an off-ramp in this war, and a story that President Trump said not only will he escort ships, the U.S. will escort ships through the Strait of Hormuz, but that they will ensure that traffic.
The thing, though, is both of those are so flimsy. We don't know through what method and means if Trump can actually have insurance for those ships going through the Strait of Hormuz, and two, to your point, in the New York Times article, the U.S. officials are saying, we don't know if there's an off-ramp. Who is there even left for them to negotiate with.
Right. Well, and President Trump has said as well that the people that he would have wanted as number 2 after the Ayatollah or number 3, the U.S. and Israel have killed. So there's not many people left to take over leadership there.
A lot of important conversations to be had today. We're going to have some great voices. We're going to hear from Yi Shi-hung of State Street, Julie Solomon of Ares, and Marsh CEO John Doyle. And one you don't want to miss, Marathon's Bruce Richards. Plus, I'll be having conversations with HBS CEO Scott Kapnick and KKR co-CEO Scott Nuttall throughout the morning.
Yeah, those will be on stage here, but we'll bring you those conversations live. Again, we're at the Bloomberg Invest Conference in downtown Manhattan. Day 2 of this conference that has really, in some instances, moved markets. Let's take a look at what's going on right now in terms of risk. S&P futures bouncing a little here, 1/3 of 1% the gain after closing down. I think not even off 1% in the cash trade.
Down 9/10
yesterday. Exactly. Nasdaq futures down 0.5%. So, up 0.5%. So even a bigger bounce for the tech stocks. But of course, they have gotten hit harder, and in some cases, like memory chip manufacturers have been reeling. NYMEX crude is right now down about 0.6%, but still pretty punchy at $74.08 a barrel. The 10-year yield at 4.07 has stayed pretty much in that range after coming up over 4.1% yesterday. I just want to point out, Danny, the recovery that we've seen in Europe has been much stronger. Obviously, the drops we saw there yesterday were deeper as well. But the Kospi in Korea down another 12% overnight after, I think, a 7% drop in the previous session. So this is a market in which a lot of investors are highly leveraged. And those memory chip manufacturers like PHEMEX, like SanDisk, have been selling off. You can see the Bloomberg Dollar Index pretty steady at a little over 1,200, and Bitcoin coming back 5% at 71,000.
It's just breathtaking, the turnaround we've had this morning on just thin amounts of news. And we're going to talk to Tyler Kendall about it in a moment. But in the meantime, some of the stocks we have our eye on, NVIDIA rose nearly 2% at one point as stocks turned around positive this morning. It's up 1.33%. Also to note, billionaire Lee Kogan bought 1 million shares of NVIDIA yesterday. He believes AI is not in a bubble of Tesla billionaire fame.
Yeah, that interesting argument continues. Right now, Apple is announcing new products after hiking prices for upcoming models of MacBooks. That on the back of rising memory chip prices. We're going to give you more on that with our memory chip guru, Ed Ludlow, in just a moment. But it's really the reversal in risk that I think is the top story this morning.
It is, and it reversed after a report that Iran intelligence officials had indirectly contacted the U.S. to discuss ending the conflict. Defense Secretary Pete Hegseth addressed the public in the last hour.
In under a week, the 2 most powerful air forces in the world will have complete control of Iranian skies, uncontested airspace. The Iranian Navy rests at the bottom of the Persian Gulf. Last night, we sunk their prize ship, the Soleimani. Looks like POTUS got him twice.
Bloomberg Washington correspondent Tyler Kendall joins us now from the White House. Tyler, it was this New York Times report that seemed to turn around markets. What did we learn from it?
Hey, Danny, good morning. Well, the New York Times is reporting that operatives in Iran's intelligence unit reached out to the CIA through a third-party country's spy unit to talk about the potential for negotiations just one day after the attack started. However, that report does go on to say that U.S. officials are skeptical that either the Trump administration or Iran is really ready for a diplomatic off-ramp. Now, President Trump himself had said over the weekend that he would be willing to negotiate with Iran's transitory leadership team, but then just yesterday he said that it was, quote, too late. I'll also point you to the fact that we heard from Oman's foreign ministry on Sunday, one day after the military campaign started, saying that Iran was interested in, quote, serious efforts aimed at de-escalation. But then we had Iran's security chief come out and back down those reports. So there's a lot of open questions here about whether or not there is this possibility for a diplomatic route, because we heard these U.S. officials earlier today really doubling down that the military campaign will be sustained. Secretary Pete Hegseth saying that they are, quote, just getting started. We are accelerating, not decelerating. One of the biggest questions here, Matt and Danny, is what leadership in Iran is going to look like. I was there in the Oval Office yesterday where President Trump said that one of the worst potential outcomes would be if new leadership was, quote, just as bad as the regime that the U.S. and Israel is working to change.
Tyler, it seems that the reasons the U.S. has attacked Iran are in question inside the Republican Party. There's a bit of a debate there because of something that Marco Rubio said yesterday, that Israel, in a sense, dragged us into it. Now he's saying that we thought Iran was going to attack us first, and the president says this as well. Is there any intelligence that Iran had been planning an attack?
Well, at this point, the Trump administration hasn't provided that evidence publicly to us, though there are these ongoing briefings on Capitol Hill. But as you're mentioning, there has been some disagreement within the Republican Party coming out of those intelligence briefings about exactly what was the thrust of the U.S. starting this military campaign. Now, President Trump was asked about this directly yesterday, and he still maintains that the U.S. was set to do what they are calling this preemptive defensive strike, despite what the Secretary of State Marco Rubio had said about Israel already being committed to such an attack beforehand. So there's still a lot of questions that we need answered here. But, Matt, one thing is for sure, this administration appears intent that they are going to continue and to sustain this military campaign until their objectives are achieved. And that's going to be something to watch really closely, since you mentioned Capitol Hill, because while broadly Republicans have been supportive of the president's efforts, we are starting to hear some cautiousness when it comes to how long this military campaign could go on, and the fact that the administration hasn't ruled out putting American boots on the ground.
All right, Tyler, thanks very much. Bloomberg's Tyler Kendall there at the White House. And I want to get reaction in markets right now with Bloomberg macro strategist Michael Ball. He's here with us at the Bloomberg Invest Conference in downtown Manhattan. And let me first get your take on the turnaround in risk sentiment. I mean, clearly, we weren't as worried by the end of yesterday's cash session as we were at the top of the session. But it seems today that a lot of investors are hoping for an off-ramp, not necessarily a Trump put here, but an end to this war before we may have expected it.
Yeah, exactly. And I think you guys were right to say these are flimsy. Yesterday was somewhat flimsy as well. It's unclear what the mechanism will be for the insurance premiums to be covered, or even if we have the Navy assets to do this. But yet the market turned around just as oil did, and we saw that both across rates and risk, and with the equity market covering about 100 points on the SPX, moving back into that 3-month range, which is a much more comfortable position when you're looking at the screens to see. Also, to your point, that some of these other stories, like the memory stock stories, have come back off as we saw some dip buying. So the market's doing what it always does. It's going back and forth between greed and fear, and generally now leaning more into the greed side as dips are being bought.
It's not just Iran, though. There are other things happening in the background. And, Michael, I wonder what meets the bar of rising to the surface. Scott Bessent saying this morning that 15% tariffs might kick in. The EU says, no, we think we're exempt. Does the market still care about tariffs at this point?
They will again, and again, it all adds to this stagflationary worry, and that's what this is all about, and this is why risk appetite now has hit another headwind. And effectively what we're waiting to see is how this affects longer-term expectations, not only from Fed easing and other central banks, but the consumer. And it'll take time for that to hit the softer data. But as far as break-evens right now and what the market's telling us, yes, there's a little bit of a shock priced into pricing and to inflation, but longer out, it's still quite stable. And that's giving comfort to basically, again, risk sentiment, which is coming back a little this morning. But again, any headline can knock that off, and we're all sort of just sitting here waiting and waiting to see if anything comes.
The interesting thing is that to see a headline that the EU expects to be exempt from tariffs.
A day after Trump said you were cutting off trade with Spain.
Well, exactly. A day after Sanchez says Spain is not going to allow the U.S. to use its resources in this war against Iran. It boggles the mind until you think about the inflation impact on the midterms, right? I mean, the Republicans can't really afford to have inflation going back up above 3%, too high for too long, and so they may have to pull tariffs off the table.
I would also add that this 15% is temporary. It's only 150 days or whatever it is. And then they're exploring new sections to lean into. That's what they told us yesterday. They're doing a study now. But the market, 150 days, this is not something that we can really price that well because, again, we don't know what's coming next, and the market usually prices a half a year ahead anyway.
Yeah, the tail keeps getting longer, fatter, whatever you want to say. It is a time of uncertainty. Michael, thank you so much for joining us. That is Bloomberg macro strategist Michael Ball. Right now, I want to take you. Apple is holding an event. They're unveiling several new products, including a MacBook Neo that was just announced. Let's get the latest with Bloomberg Tech's Ed Ludlow in San Francisco. And Ed, the background, as we're getting these announcements from Apple, is a memory chip bottleneck. How is Apple grappling with this as they're making these announcements of new products they're putting onto the market?
Well, Neo is not a surprise because there were some leaks in the last 24 hours, but it's kind of contrary to that story. They've come out with a base or entry-level Mac that uses the highest performance processor from the iPhone. So it has the 18 chip as opposed to the M5 chip, which is across the lineup of new Macs. What we had been saying going into this before the Neo was announced is that essentially there's an effective price hike from Apple because across the new range of Macs, they've raised prices from a range of $100 to $200 and also eliminated the entry-level starting point in terms of storage. So you get higher specification, greater storage, but at the entry point being a higher price point. And so very simply, like DRAM is like the working memory of chips, NAND is the flash is the storage, and there is a bottleneck and high pricing on both because the main suppliers and providers of capacity are prioritizing AI data center. The story has been as simple as that. So simultaneously in London, New York, and Shanghai, they are now giving access to the general public to these new products, but that's the backdrop that they're facing.
All right, Ed, we're going to continue to cover this story and look forward to your coverage on Bloomberg Tech as well. Ed Ludlow there anchors Bloomberg Tech and also is our memory chip expert here, as well as all things having to do with microprocessors. Check on markets right now as risk sentiment turns around just about 18 minutes until the opening bell. You can see that we have gains on S&P futures, about 1/3 of 1%. NASDAQ futures are up a little bit more with the gains that we see in NVIDIA. NVIDIA moving about 2% higher, and that's enough to power the tech-heavy index.
It's just so wild to look at the Kospi have its worst decline since 2001, to see European stocks sell off 3%, to see EM carry get crushed, and oil turns around, and U.S. stocks didn't even close down 1% yesterday. It goes back to Solomon saying his surprise that we haven't seen more of a reaction in markets.
Yeah, absolutely. I think it is fairly surprising, but this is a market. These are investors who want to buy the dip.
True.
And I think the Kospi may be a special circumstance because of the amount of leverage. I'm not an expert on Korean investors, but I have been reading overnight that there's a ton of leverage in that market. But absolutely fascinating that people are waiting for a Trump put where maybe there isn't one.
Yeah. Well, some of the other movers on our radar this morning, Bitcoin and crypto stocks, they're surging with that risk turnaround, up 7.3% after Bitcoin took a hit yesterday.
LegalZoom was downgraded by Barclays as growth is expected to slow this year and AI risks to certain software stocks mount. We're going to talk a lot more about software throughout this program.
And one I don't think we're going to talk more about, but worth just bookmarking, Abercrombie shares rising as much as 6% when earnings came in line with estimates, but all of a sudden they sink 6% on lower and weakened guidance, or weaker than expected guidance, rather.
Coming up, Blackstone employees stepping up in support of the firm's flagship private credit fund, pitching in $150.
Welcome. Can everybody hear me? There we go. All right. This damn program. I'll get it eventually, guys. All right. Before we get started, just a small announcement. Vita Bella is bringing alphas back with their new performance program, offering free testosterone replacement therapy, or BT2 for life, to every member. Vita Bella users real medical providers and includes unlimited injection supplies included in the membership. Get access to wholesale price medication in every health and wellness category by visiting vitabella.com. Actually, I'm sorry, it's vitabella.com/TRT and schedule a free consultation today. Results may vary. Provider approval plus consult required. Check the link in the description. All right. See how the heat map is looking. Bitcoin crossed over 71,000, pushing 72. That's great. Since 1 o'clock or 2 o'clock this morning. Bang, 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 bang. Crude oil down slightly. Let's see. You know, I recently paid for a TradingView membership, and I've been blown away by how fully comprehensive this program actually is. Yes, I know I'm late to the game, right? But, I mean, damn. There's so much in this program. There's a link in the description for this as well. But, I mean, tell me what's not in this program. Absolutely love it. All right, let's see what the dollar's doing. Came down a little bit. I'd like to point this out. I pulled this up last night. This is the lifetime chart of Bitcoin. Each candle represents a day. And I was just thinking this was a beautiful chart. And here we have silver and gold. As you can see, they look almost identical. However, you stand to make more money on silver just because when it moves a lot more than gold does, percentage-wise. All right, this is the 5-minute candle chart for Bitcoin, and this is the all-time from its birth. It's actually a little after its birth because, like, it wouldn't go any further, and we all know it didn't start at no $200 or $300. I remember when it came out, though. I totally should have got in on it, right? Did you know that 15 years ago, if you'd invested $1,000 into Bitcoin, that $1,000 right now would be worth over $1 billion? Hindsight, right? All right. The pre-market looking like a mixed bag. Looks like Nvidia's up a little bit, Apple's down. I have this live stream playing next to me so I can monitor it on Rumble, and then I have a YouTube one running in the living room, and they're on different delays, and I just heard myself scream $1 billion over here, and then I heard it out in the living room. Not that anybody cares. Drop your stock picks in the chat, and we will analyze whatever you put. Whatever you guys want me to look at, I will look at. We are going to go to Bloomberg and hear what they're talking about. I'm currently 11 minutes before the bell.
Silas, why doesn't someone just say no? That's not what this asset is for. We don't offer that kind of liquidity, and you knew that when you signed up. We're simply not going to breach the agreements that we made with investors in the first place. And
well, that's great. Let's see what live now from Fox.
They have ignored court orders. They have shot first and asked questions later. Time and again, they have gaslit us by demanding that we ignore what we see before our very eyes.
Who listens
to
this
American
retard
people are not so
anymore?
easily fooled. The image of this brutal campaigner seared into our collective memory.
This guy's
the
just
fragile
trying to
innocence
make
of
news.
the 5-year-old boy in a bunny hat
Thinks he
being
has
led
a
away from
chance
his
at any
family.
other role in
The
government.
maddening cruelty of a barely clothed man, a U.S. citizen, being dragged from his house in the dead of winter. The sheer devastation we feel of seeing the lifeless bodies of Renee Good and Alex Preddy. Long after the federal government's agents of chaos pack up and leave, and long after the fraudsters whose name this hearing was supposedly called are prosecuted and imprisoned, the good people of Minnesota will still be picking up the pieces from these senseless acts of cruelty and violence. As we forge ahead, I hope Minnesotans will remain grounded in a sense of justice, a sense of right and wrong. We know that the way to deter crime is to pursue offenders regardless of who they are, not to pardon them because of who they know. We understand that a key to keeping our people safe is to allow prosecutors to uphold the law, not to punish them for refusing to violate it. And we appreciate that public trust comes from building common sense anti-fraud safeguards into our programs, not by tearing down established norms. I've been invited here today to talk about
Unless
how
those
Minnesota
established
pursues these
norms are
objectives.
stupid.
And I hope we can have a conversation about how to strengthen program integrity in
Depending
every
on
state
who
in the nation.
established
A
those
single
established norms.
taxpayer dollar wasted on fraud is a dollar we can't tolerate. That's why, as governor, I
Who the
have
hell are
taken
you to talk
decisive
about
action.
fraud?
I appointed a head of program integrity to oversee statewide anti-fraud efforts. I created the position of Inspector General at the Minnesota Department of Education. At the Department of Human Services, I ordered data-driven reviews and, where appropriate, corrective action against providers. I've directed my administration to work with our partners in state, federal, and tribal law enforcement to make sure that fraudsters go to jail. Our cooperation with the FBI and the Department of Justice have led to serious criminal charges for over 75 individuals. Most importantly, year in and year out, and long before Minnesota programs were featured on right-wing social media, I've worked with the Minnesota legislature to give state agencies the authority they need to take action based on red flags when they discover them. There's undoubtedly more to do. We'll continue to do the important work of combating fraud, but as we do so, we're going to remain true to Minnesota principles. We will feed our hungry children. We will help the poor afford health care. We will assist people with disabilities while also keeping fraud in check.
Sure.
We'll demonstrate our decency, our integrity, and never yield to political scapegoating, particularly of our most vulnerable communities. In these extraordinarily trying times, the people of Minnesota have come together to show the world their values. I'm proud and honored to be their governor, and I look forward to today's questions.
Thank you, Governor. We now recognize Attorney General Ellison.
Thank you, Chairman Comer. And thank you, Ranking Member Garcia. And thank you to all the members of the committee. My name is Keith Ellison, and I have the honor of serving as Minnesota's Attorney General. You have invited me here today to speak about the topic I feel very strongly about, fraud enforcement. I look forward to discussing the contributions of my office and the contributions we've made to fighting fraud in our state. Fraud in government programs is reprehensible. It takes food from the tables of the hungry. It takes shelter from those without it. I have worked every day as Attorney General to hold fraudsters accountable, and I'm proud of our record. We've won 300 Medicaid fraud convictions, more than any other state of similar size, and recovered over $80 million for Minnesota taxpayers. We've returned tens of millions of dollars to victims of consumer fraud in Minnesota. Since 2019, our Charities Division has resolved over 50 investigations and dissolved 17 sham nonprofits. It's important to note that under Minnesota law, my office has limited jurisdiction over criminal matters. The only kind of criminal case we can prosecute all on our own is Medicaid fraud. Any other kind of criminal case must be referred to us by county attorneys.
I don't know about you, but I don't care what they're talking about. Let's go to Yahoo.
And maybe it wasn't perfect how large the organization got, but I suppose if you're sitting around with your CFO and you're saying
5 minutes away from the opening
we might
bell.
have 50% too many people, and
Yeah.
you say, all right, well, let's get rid of 80% of those. Like, I kind of have to respect the, not have to, I respect the boldness of the decision. And because it's
Crypto
publicly
looking
traded,
flat in
we
the
will
last
get
hour.
to find out very vividly how this works in the next couple of years.
Yeah, we will.
Well, over the last 4 hours, we're pretty
have lots
great.
more to talk about.
ADP numbers were
but
good
we
today.
have no more. But we have
ADP
no more
numbers were good.
They were good.
Job switching is the, you get the smallest pay bump on record for job switching.
Interesting. Everyone take note.
Let's do that tomorrow.
Okay.
Over the last day,
well, we
the
got the jobs
entire
report on
market
Friday
looks
too,
red.
so we'll have lots more opportunity
right.
to talk about
But
jobs.
pre-market looks like everything's making
let's
a
make
little bit of a
jobs week. I like
recovery.
that.
But this is what happens.
Week's already over.
Every week is
Ticks up a little
jobs
bit.
week.
Tomorrow
as far as I'm
probably be
concerned. All right, coming up.
Every week you have a job.
Bloodbath,
It's jobs.
maybe. I don't know. Could be wrong.
I like that. All right,
Bitcoin looking
coming up
great.
Next on Yahoo Finance is opening bid. Our executive editor Brian Sazzi's here now. Saz, what's coming up?
We're going to talk some stocks, Julie. There's a little bit of bounce back Wednesday. We're going to keep that conversation you guys were just having going. Good stuff indeed. And then so also starting to see a pickup in those folks calling for a correction in markets and, dare I say, a bear market. So we're going to dive into all this stuff.
All right, looking forward to it, Saz. Thank you. Opening bid is next on Yahoo Finance.
Already sent you a scribe with step-by-step instructions. Do it once.
Let's go back over to Bloomberg.
Volatility, either cash, and we've seen enormous amounts flowing into cash starting at the end of last year. It continues today. Gold, hedge strategies.
All right, Yishin, we're going to keep you with us through the opening bell. State Street's Yishin Hung staying with us. A check on the markets as we head to the bell. We're looking at risk bouncing futures higher this morning. This is Bloomberg.
Okay, what we're looking at now, right in here, this is Bitcoin over the last 5 years. And guys, this right here, this little bounce, this could signal how it's almost level with here. This could signal the bottom. It very well could. However, you know, if you go by the history of Bitcoin and their 4-year chart, we know it's going to take some time to get back up above this. If we're still within that 4-year cycle. A lot of people say that we're not. That's yet to be seen. Over here, if you notice, I've pulled up other things. What you're looking at here is the United States inflation rate month over month. And it is currently showing a 0.2% inflation rate month over month. Here's year over year, we're at about 2.5. Another year over year from Bureau of Labor saying 2.4. We've got SLV, paper silver, sitting at about $74, $75, when silver itself is at about $84. Now, when you see a large discrepancy like this, paper silver usually takes a minute to catch up. So this might be a decent buy, providing silver continue to go up and pull SLV with it. I'm not so sure that silver is actually ready to bounce on up. What I've got right here is back from when, you know, in February when we had that massive crash. I didn't say massive, that's relative, right? For silver, it hurt just a little bit more. You know, we ran up to $121.64, and then each one of these candles is 4 hours. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. About 2 days, we fell all the way down to $71. I don't know about you, but I lost a fair amount with that. Didn't see that coming. However, if you take a look at the Fibonacci's, and I talk about this every time I go live. Once we get back over $100, we're going to start screaming towards 130, according to the Fibonacci's. However, you know, 130, 140, it's going to crash back down. Probably a larger crash than this right here. I mean, that was like a 35-ish% drop. So if it runs up to 130, 140, it'll probably come back down below 100. I would say probably around 80-ish. However, yeah, see, if you're going to get into silver, I would say now's a great time. I don't believe we're ever going to go below this level ever again. I could be wrong, but I just don't see that happening with the way industry keeps up with things. When the price of silver goes up, when the value of silver goes up, industry has to buy. They have to continue buying. That's why your short-term silver futures are always going to be a good investment. Because in the short term, if you've ever looked at silver futures, you'll know that there's several of them. And, looks like we're late for the bell.
Actually a crypto thing.
I have an issue with this. Their ticker is PER.
Yeah.
It can't be PER and not be animal related.
Right, it should be like
adjacent to cats somehow.
kind of thing.
Yeah, agreed.
In any case, it's not, and none of that matters because we're so focused on what's going on in markets on day 5 of war in Iran and day 2 of the Bloomberg Invest Summit, where we're talking a lot about private markets and whether or not we could see a correction here that starts to become a real problem for public markets.
Yeah, but look at what public markets are doing. Nvidia is positive. It's not as high as it was in the pre-market. At one point it was up 2%, but it does just speak to this general turnaround that's been happening in stocks. That the world's biggest stock is still positive after we saw a massive sell-off basically everywhere else in the world.
Yeah, well, certainly in Korea, right, where these memory chip makers are widely traded, and investors there apparently highly leveraged. The Kospi was down another 12% overnight. Apple has an event. Right now it's announcing new products, including
Apple's not
MacBooks,
doing too bad.
$600 that could threaten the Windows PC market, but I can't think of a time when Apple product announcements will be more overlooked than today. I mean, it's the last thing you care about.
Would have to agree with that. And what we care about is war and the market's response to it, which today is very muted. Goldman's David Solomon has also been surprised by the market reaction to the Middle East war. He called the stock market move
that's because these things take
and
time.
noted it will take weeks before investors understand the implications of the war. Let's bring back in Yi-Shin Hong, President and CEO of State Street Investment Management. And Yi-Shin, you know a thing or two about these markets. Have you
Crude
been surprised
oil
by
backed off of this area?
I guess not lack of
fairly
reaction,
well.
but the muted reaction we've seen to the events over the past week.
I think the market is really cutting through and wanting to understand what's the implications for
I still believe crude oil
prices.
is going to rise a good bit more just because of the war. Even though, Trump's drill baby drill policy will help to buffer that a little bit. If he hadn't had such an aggressive oil drilling policy, we'd probably would have spiked up to about $100 a barrel by now. If you're old enough to remember 9/11, I remember exactly where I was. I was laid on my couch. I didn't have a job. But, if you remember, the week of 9/11, gas, where I was living in Atlanta at the time, gas dropped down to like 89 cents a gallon. Oh, it was heavenly. Could fill up my entire car, my little 15-gallon tank, for less than $15. It was amazing. Can you imagine? Wouldn't that be nice? What's the cheapest you remember gas being? The cheapest I remember it ever being is about 79 cents in the 80s. I was a child, so I didn't really care, but I do remember seeing the signs. 79, 89, 99. Regular was 79 cents. I remember when leaded gas was still available. What about you? Drop some stock ticker symbols in the chat and let's talk about some. Let's look at the crypto heat map. Just in the last hour, looks like about 1 to 2% across the board. Silver's up about 3%. Crude is down less than 1%. The dollar is down a little bit. Inflation is down across the board. Coinbase. Wow, Coinbase is doing great. Let's pull Coinbase up. If you aren't familiar with Coinbase, you should get with the program. Coinbase is one of the most trusted crypto exchanges available. However, BTCC is the oldest. And they've got some amazing deals. I hate to shill, but I do have an affiliate account with them. It doesn't really provide much. However, BTCC, I have a link in the description. BTCC is the oldest crypto exchange, and if you've ever played with like PHEMEX, they look very similar to PHEMEX. It's a very complicated app. It's not for beginners, but they've got so many ways to give you free money. It's unreal. Like, I wasn't even familiar with them when I first started playing with them. Every time I turned around, they were giving me free money to trade with. You can't take that money out. It's only for covering like trading fees or putting it with other money. Like, they gave me $20 just for liking them on X. There's so many little things in there that they'll give you free cash for. Anywhere from $5 to like $100 for every little thing you do. They gave me over $1,000. Of course, I had about $5,000 that I put in that was going in and out of it. So, you know, results may vary. Plus, they give you money once you cross over certain thresholds in trading, and you can use up to 100x leverage. So they have like $100,000 where when you cross over the $100,000 throughput mark, they'll give you a couple $100. But what happens is how they calculate that is how much of value your trade is with the leverage. So let's say you put $1,000 in and use 100x leverage. Well, they count that as you trading $100,000. And then, of course, when you do that, I put a $5,000 trade in once with 100x leverage. That made me profit as if I were trading with almost 10 Bitcoins. So Bitcoin went up $1, I made about $9. But conversely, that is how you can lose your ass. So trade with care. Be very careful. Make sure you put your stop losses in, because, you know, you can lose a lot of money fast, like I did. I lost about $50,000 in a matter of weeks. That's why I'm homeless now, because I sold my house. And I did dump some money into just holding investments rather than trading, but I lost a lot of money in trading because I bought in when Bitcoin was 95,000, and I didn't expect it to come down. You know, there's no such thing as a crypto expert. Don't let anybody tell you they're an expert in crypto. There's no such thing. It's too young of a technology. And not very many people really truly understand it. You know, they understand investing, they understand charts, so they think that that translates to them understanding crypto and blockchain. Blockchain is such a beautiful technology. There's a video out there, I forget what it's called. I think it's either God Bless Bitcoin or The Rise and Rise of Bitcoin. One of those two, I can't remember which. But whichever one it is, it starts off with discussing the history of money entirely, so that you have a good understanding why crypto is such a wonderful technology and why it is so revolutionary to money. Fundamentally, it has the power to change the entire power structure of the planet. Now, those with that power sure don't like that idea. Decentralizing finance? You mean making it publicly available for everybody to see? Yeah, that would make manipulation a bit more difficult, because it's open ledger for the world to see. So, for the last 15 years, up until recently, what you've seen is major institutional attempts to badmouth crypto, and they've done their best to stamp it out ever since its inception. All you see on your late night talk shows and your morning shows is people calling crypto a scam and a Ponzi scheme. Yeah, those are the people that don't really understand it. If you believe that those idiots on The View understand crypto enough to have a valid opinion, the same can be said about all of your late night talk show hosts, Stephen Colbert, Jimmy Kimmel, Jimmy Fallon. None of these people understand crypto enough to comment on it. I mean, if you know a shred about programming, if you take one look at the white paper of Bitcoin, then you will be able to understand how beautiful of a technology it is. It's so beautiful, it's almost alien. Like, really. It's genius. And what you have seen, since they have not been able to stamp crypto out over the last 15 years, well, let's see, 17 years, right? 2009, 2008, late 2008 was when it really came out, but yeah, what are they doing now? If you can't beat them, join them. Now you're seeing major institutional adoption, mainstream adoption. The problem are these stable coins. That's how they're going to attempt to centralize things so that they can manipulate it. Because if they can manipulate the stable coins, then they can manipulate the entire market. So don't leave any money in things like Tether or USDC or USDT, any of those stable coins. If you are a true Bitcoin maxi, you'll stay with Bitcoin for the majority. There are plenty of other altcoins or other little shit coins and meme coins that you can make a quick buck on. But, you know, as far as I'm concerned, Bitcoin is the way. I've made shirts with that statement on it. I have coined the phrase. Anytime you see Bitcoin is the way, that's mine. I've got plenty of merch in the description. Link in the description for our merch store at Fourth Wall. But I'm very proud of one of the designs that I came up with. And first of all, I got my hat with my logo on it and Bitcoin buttons I had designed. And these hoodies, man. This one's dirty. I gotta wash it. But yeah, that's my design. Dump the dollar. Bitcoin is the way. This is embroidered. It's not going to come off in the wash. And I was really impressed with the quality of them. I ordered quite a few items of my own merch because I'm not going to try and sell it unless I understand the quality. And it turns out the hoodies are very warm, very comfortable. And I refuse to sell a hoodie for $50 like most people do. So, pretty sure it's under $40. And I only make like $2 or $3 on the thing, so I didn't make the merch to make money. I made it for fun, really. All right. Crude looks like it's trying to make it a little attempt. It's going to bounce around depending on what goes on. The next news catalyst will dictate what it does. Gold's dicking around a little bit. So silver, I'm going to go ahead and guess. Yeah, they pretty much, silver and gold follow each other a bit like Ethereum and Bitcoin follow each other. But yeah, what do you think is going to happen with Bitcoin? What do you think is the next milestone? Let's see. Yeah, you can pretty much draw a line. We're right here. I have heard from people smarter than myself that we are back into the Bitcoin bear market, and that would line up with the 4-year cycle. Chances are we're not going to see another all-time high probably until late 2028, 29. I know that sounds far off, but it really isn't. Can you believe we're almost a third of the way through? We're over a quarter of the way through with this century. You know, I'm 48 years old, and we all know how time has almost a telescoping effect as the older you get, you know, because if time feels like it moves faster and faster the older you get. Every decade that goes by seems shorter and shorter. And we're over halfway done with the 20s. It's just crazy to me. So I was born in 1978. My grandmother was born in 1928. She was 50 years old when I was born. So when I turned 50, she passed away in 2012. And I loved her to death. She was such an awesome woman. But in 2028, when I'm 50, when I'm her age, she would have been 100. It just blows my mind. It really does blow my mind. Anyway, NVIDIA looks like it's trying to push through this little bit of resistance right here. The dollar looks like it's come down a bit from, what's that, last night about 8 o'clock. It was right at even Stevens. It's down a little bit. That is crude oil. Yeah. Disregard these trading signals on things like the dollar. You cannot trade everything that I'm looking at. Coinbase kicking ass this morning. Let's see, what are the main... I always love looking at this because there's always some ridiculous unknown stock that's at the top. Are you ready for this? Vuchan Group up almost 1,000,000%. Congratulations if you saw this one coming. Who are these people? Vuchan Group engages in the provision of supply chain, financial services, and enterprise solutions for the technology industry. The company was founded by Jeffrey Kang in 1995. It was headquartered in China. Well, I'm sure only insiders made the money off of this, up 1,000,000% to 1 penny. Talk about a worthless stock. That is not going to sustain itself. What the hell am I looking at? This chart is retarded. What? Yep. That's why these big winners are so funny. $250,000%. General European Strategic Investments, Beneficial Holdings, Medicine Man Technology. These are all the big winners of the day. Wow. Silk Energy. If you look, energy, technology, these are the biggest winners. Now, if you notice, there's no analyst rating on any of these because a lot of these companies are no-name companies. And they're only up this much because of some sort of manipulation. Usually a stock, when it goes up that much, is not a natural move at all. And a lot of these companies, what they do is they pay companies. Like, have you ever seen those people where you sign up on an email list and they're like, we'll send you stock picks every day in your email? What they do is they contract with these sub-penny stocks, and in exchange for money and or stocks or shares of the stocks, the company pays them to hype them up. And what they do to hype them is they tell you, check out this stock pick in the morning. Right when the opening bell comes, it's going to go up. Well, it's going to go up because he's sending out these emails to people and everybody's going to buy in. That's what causes it to go up. Then those people sell their shares and they profit and take your money. And if you're smart enough and quick enough to get out in time, you might make a little bit of money. But by and large, those stock people, that's what they do. It's a brilliant strategy, but you must be very careful. Because a lot of the stocks that they're pushing, I would argue, all of the stocks that they typically push, they are being compensated quite well by the company and by you buying in when they tell you. Because you cause it. Their people on their email list cause the stock to go up, and then they sell their shares, usually. If the company's worth a damn, they won't. But 9 times out of 10, any of those stock pick email lists that you see, whenever they give you a pick, it rises and crashes in the first 30 minutes of the market opening, and that's exactly what's happening. I'm well aware of that situation. That's it's a very old strategy. It's a very old scheme. All right, S&P, it's a mixed bag. See what the Russell 1000 looks like. Again, a mixed bag. Dow Jones Industrial, mostly red. Nvidia carrying the entire market. Amazon too. The NASDAQ. Yeah, we got a mixed bag today, guys. I love TradingView. I mean, you can look at so much stuff. It's literally got everything. Like let's just check out China. This is always fun to do. This is just for shits and giggles. Mainland China, Shenzhen Component Index. Look at how well China's doing today. Damn. Pretty impressive. Still, is this their biggest wiener? Hard to see so much. I don't see anything up major. No major runs. In fact, I'm having trouble finding much over 1%. Still, mostly green in China. Do we have Russia in here? I would love to see how Iran's market's doing if they've got one. Yeah, it doesn't look like they've got anything in here. Let's see what the Israel index is looking like. Wow, they're up pretty good. Electronics and health in Israel is sucking it. I do so enjoy looking at other countries and seeing what they're doing, seeing how their economies are working, because it definitely affects us. You know, Iran, since we've been attacking Iran, they've just turned around and started attacking everybody nearby. Like I watch all sorts of news. I try and stay right down the middle and be, fairly nonpartisan. So I take in and consume a lot of media because they're all full of shit and they all exaggerate and lie to some degree. I don't care what side of the fence you sit on. They all do it. And the only way to get a clear picture is to take it all in and find the common denominator and then use your brain instead of your biases. So I was watching Jon Stewart. And he made a good point. When you're in a bar fight and you're getting slapped around by two guys, like Iran is getting attacked by the United States and Israel, you don't turn around and slap the other guy next to you and bring 5 more people into it. And that's what Iran's been doing. They attacked, Cyprus? They attacked quite a few other countries. Iraq? Like, what are you doing? Probably what they're doing is they're probably trying to disguise those attacks as other countries to try and piss them off, maybe pull them into it. Yeah, that's what Iran's been long overdue for what's going on right now, and I am so happy to see it happening. Google some images from Iran in the 70s and tell me they don't look a lot like America did around the same time. The German index looking mostly red. It's funny how we don't have Iran or Iraq Let's see what the Saudi market looks like, huh? Pakistan. Hey, there's Russia. See how Russia's doing. Ooh, mostly red, Russia. Russia's not doing so well. You know what they say about war? War's good for the economy. Based on this alone, it would not surprise me if Russia decided to get in on the action just for the sake of their economy. War's big business. If you doubt that, you might have a hole in your head. Saudi Arabia. Let's see what old Saudi Arabia is doing. Ooh, what is that? Is that their biggest company? They're mostly flat. All right, let's go back to the US of A. It's looking like a mixed bag today, guys. On the 1 hour and for 24 hours. Crypto's looking a little flat. Still mostly green over the last 4 hours. And over the last day, definitely green. Look at that. Almost 8% for Bitcoin. The S&P 500 is up 0.1%. Nothing really to write home about. The QQQ is up about a little over 0.5%. Tesla is up over 1%. There's a lot of volatility, but it looks like volatility overall is down by about 4%, which is good. Bitcoin knocking on 72,000. Let's go, baby. I'm holding a big old bag I bought in at 95. But you know what they say? It's not a loss until you sell. And I'll be damned if I take that loss, because, like, it's a lot. Google, down 0.1%. Super MicroStrategy, up 8%. Wow. Let's take a look at old Super MicroStrategy. Coinbase is kicking ass today. Super Micro. It's old Michael Saylor. Probably one of the biggest set of balls in the crypto space. That guy's crazy. I love it. But as much as I admire what he's doing and like what he's done, all of this corporate buying of Bitcoin that's going on really doesn't bode well for me. The 20 millionth Bitcoin is actually about to be mined, which will only leave 1 million Bitcoin left to be mined in existence ever. And that is probably going to take 100 years. It is going to take roughly 100 something. I think it's more like 120 years, they say. Because, you know, every few years, the halving cycle where they cut the ability to mine in half. That's usually when you see the biggest drop. And it's very shortly after that you see Bitcoin run into its bull cycle. So it's getting less and less profitable to mine Bitcoin. However, did you know that in Iran it costs less than $2,000 in electricity to mine one Bitcoin? Isn't that interesting? The government has basically subsidized it so that they could try and dominate the market. Excuse me. Their government that is in shambles now, and with the supreme leader dying like the dog that he was, that may change. But if you want to talk about ulterior motives for getting into this war, that might have a little something to do with it. Just a theory. The liberation of the Iranian people is great, but you can never trust that anybody in politics is giving you the entire story. They can't give you the entire story. That's why this attack on Iran was so surprising to everybody, because they held their cards. you don't go advertising your plans. That's how they fail. So that's why it seemed like such a surprise to everybody in the media. And speaking of media, let's go over to, you're sick of hearing me yak, let's go over to Yahoo and see what they're saying.
Welcome to Market Catalyst. I'm Julie Hyman. We are 30 minutes into the U.S. trading day, so let's get straight to it and take a look at the major averages where we are seeing a mixed picture here. Actually, now all three going into the green. I suspect maybe it has something to do with services, the measure of services in our economy coming to us from the Institute for Supply Management, coming in at 56.1. The estimate was for 53.5, so well above what analysts had been estimating. Services prices paid index at an 11-month low of 63. Now, this is in sharp contrast, by the way, to the manufacturing numbers we got a couple of days ago from the ISM, which actually showed that a little bit of improvement in manufacturing activity, but the prices paid index was at the highest since 2022. So interesting here to now have services prices coming down and also just the overall read improving here. That overall read, by the way, is the highest since 2022. So the services part of the economy is the largest part of the economy by a pretty wide margin, and so it looks like that is proving encouraging. We saw a little bit of a bump up in stocks, all three major averages flipping into the green. Right now, the Dow is up about 68 points, the S&P 500 up about 0.33%, and the Nasdaq Composite up about 0.8%. It also speaks to a lot of the strategist chatter that we've been hearing out there, which is that even if stocks pull back a little bit more, that the underlying fundamentals remain strong unless we see oil really remain at high levels for an extended period of time. And speaking of oil prices today, by the way, crude oil futures are coming down a little bit after we have seen the strength of the past few sessions in the wake of the beginning of this Iran war. Still up over the past 3 days, but you can see this kind of pattern of coming up and then coming down during the session, and now negative here on the day for those oil prices. So, of course, we're going to continue to watch that very closely. In terms of the groups in the S&P 500 that are on the move today, speaking of energy, the XLE is down today, but it, too, has had a strong few days before this, or more of a sideways, I guess, before this drop. But year to date, this is the best performing group. So seeing this little bit of a pullback after that strong performance that we have had. Consumer discretionary and tech and communication services coming back today and helping lead some of the gains that we are seeing, even though the majority of the S&P 500 groups are still in the red here. But really what we're seeing here is investors trying to make sense of what to do amid the Iran war, the back and forth theory, every new development. I wanted to look back at history at how markets have performed in prior geopolitical conflicts. Joining us for more, Yahoo Finance Markets and data editor Jared Blickery is here with me in the studio right now. And Jared, you know, we have this kind of mental image of markets largely shrugging off geopolitical events, at least equity markets largely shrugging them off. So how have we seen this sort of play off? I mean, you got to look at oil markets too, not just equity markets.
Yeah, the energy markets no doubt will spike on this, but even energy markets tend to give back a lot of those worrisome gains in weeks, if not months, and sometimes it's only days. So I went back to all the conflagrations back to 1990, thanks to data from Ben Worschel, and that's the really the clean takeaway. There's not a lot of patterns that you should buy this stock, or I'd love to show you some heat maps here, and you can see on your screen. I'm going to go through a bunch of these different markets and tell you exactly why you should be watching them, and then some of the levels too. So here we have crude oil futures. You were just showing this chart. Yeah. Let me show you a year to date. So we clearly spiked up on this, and in fact, intraday we hit about 78. 80 is my line in the sand. Why? That's just
this is WTI.
This is WTI,
not Brent. Yeah.
So here's a 3-year chart, and I want to show you technically why this move over the last few days is so important. finally broke out of this downtrend. And when you have something like this happen over a course of 3 years, basically consolidating and then moving down, and then you break out, that is a regime change. And so it changes investor psychology. So my thesis is crude oil, WTI, if it holds over 80, that's really going to get inflation fears stoked again. And in fact, I think that's what we saw Monday, because if you were looking at the bond market on Monday, Tuesday, Wednesday, you saw bonds actually sold off. You saw yields pop a little bit, and that's not typically what happens around. I'm going to show you a 3-day of the U.S. 10-year yield. So we came down on Monday. We rose a little bit since then.
That's the 10-year yield.
When bond yields are rising, that means bonds are being sold. And so we're not getting that safe haven flow into treasuries. But here's my second market with the levels you got to watch. U.S. dollar index, because we did see a very strong reaction.
That's the dollar index.
55 basis points or 0.5% over 3 days doesn't look like much, but I can tell you it really is.
Well, and it really is if the other havens are not working.
Yeah.
Right? You have to look at that dollar chart not just in isolation, but in combination with the Treasury chart or with the gold chart, for example.
Very contextual.
To show that people were coming into the dollar at a time when they were not going into other traditional havens. By the way, they weren't even going to other haven currencies necessarily.
They're going to the stock market.
Yeah, I mean, the Swiss franc wasn't really getting a bid, which normally it might in this situation. The Japanese yen wasn't really getting a bid here, but the dollar has been.
Yes, and there are a couple different reasons for that. Dollar is typically a safe haven, but also crude oil, which shot up in price, is priced in U.S. dollars. So whenever you have elevated oil prices, suddenly the world, which has to buy crude oil for their economies, they need to scramble and buy more dollars. And so there's just a very systematic relationship right there. So the reason I'm watching U.S. dollar index here, I don't want to see this, and it's about at 99. I don't want to see it at 100, and actually 100 and change, because that's what these highs are here.
What happens if it gets to?
Because that is, then you're going to hear the dollar wrecking ball headlines. You're going to hear the dollar pain trade. That is, Wall Street has priced in a weaker dollar going forward for a long time, and that has been a very accurate consensus trade. Sometimes consensus is accurate, but if DXY can shoot above 100, and I'm going to show you a longer-term chart here. Here's that 100 level. Then we're back in this old range, and that means we could see significantly higher dollar, and that would weigh on international stocks. It would weigh on commodities, especially metals. It would weigh on cryptocurrencies. Yeah. So the stronger U.S. dollar, don't want to see this particular index above 100.
So this is, I want to come back to your original point, because I think that is sort of the most important point, is that there is no war playbook that works in every case.
Right.
Right? And
so contextual.
What do you think about the rising dollar? Do you agree with what he just said about how if it runs up to about 100, that's a bad thing? I'm sure it's bad for certain investments, but is it bad for you? Comment what you think. The dollar right now is coming down a little bit, but as you can see, the trend is very clear. It likely will pop up to about $1, like he was saying. It'd be very interesting to see what happens at that point, but we've got plenty of resistance for it to get through. And when you see resistance on something like the dollar, this isn't your typical sort of resistance. These are more worldwide stopping points or catalysts that need to occur for it to break through there. It looks like it just fell below the trend line. Crude oil coming down, gold and silver still not looking like a good buy if you're a trader, unless you want to short it. This is the 4-hour chart. Let's pull up a 5-minute. Yeah. This is a good spot right here for it to bounce off of. I sure do love me some silver, baby. Crypto heat map looking fantastic. Bitcoin looking like it's struggling to hold on to that 72, fell below. I don't know why there's no resistance lines. There's always a psychological resistance in any major mark, like the 73,000. Like this right here is a 70,000. As you can see, it blasted right through it. Took a minute, It slowly crept up to it, and then as soon as it crossed it, pow! It ran up, plowed right through 71, but right at 72. Hit a little bit of ouch. Screwed around a little bit here, then banged right through it. And here at about 72.5, there's some psychological resistance in the market right there. And of course, you've got people who are going to take some profits that bought down here. NVIDIA trying to bust through this $183 mark. I sure do wish it would go ahead and run up to that price point prediction that was made of $280. That sure would help my calls out a little bit, which I haven't even pulled up my investments just because I don't like being depressed. 10-year government bonds looking... see, this is from 3 o'clock in the morning. The interest rate on them came down a little bit. Drop a stock pick in the chat. Let's pull something up. Y'all give me some ideas. Y'all give me something to look at. What am I missing? What do I need to check out? Look at the Vanguard S&P 500. Vanguard's a huge conglomerate full of all sorts of yummy stuff. Well, let's see what Bloomberg's saying.
And you had Treasury Secretary Scott Bessent just saying that tariff may climb to 15% this week. I think this is a sign of what we're going to see from more companies going forward.
That sounds familiar.
Matthew, a company that investors always like to hear about, Tesla. What is the latest over there?
Yes, Tesla climbing, Alex, about a little more than 2% this morning. The stock was reinstated at Bank of America with the recommendation of buy, and the reason is really interesting. They're talking about consumer autonomy, their robotaxi services. They view them as a leader there. It's the latest in a trend we've seen with Tesla, which is that this is a company that makes its revenue by selling electric vehicles, and it is a company increasingly seen on Wall Street as anything but an EV maker. They're seen as a robotaxi stock, a physical AI stock that increasingly drives the trading here today. Again, just the latest example of this.
All right, one more. What do you got for us?
I've been keeping an eye all week on United Airlines. They've been one of the worst hit stocks during the war. Of course, the disruptions to energy supplies threatened to raise fuel costs. You've got travel disruptions. Currently up about just under 1% this morning, but some really choppy trading there as traders have been parsing all these headlines. The report that Iran might be seeking negotiations, then Iran's denial. That comes after.
Breaking news, a U.S. Navy submarine sank an enemy warship with a torpedo for the first time since World War II. Wow. That's impressive. We are hammering Iran bad. Like, they're finding out. They already effed around. Now they're finding out, aren't they? I've seen some glorious videos of what we're doing to Iran right now, which the Iranian people are just loving. And I don't care what your political position is, the liberation of the Iranian people is a good thing. Stop playing like it's bad. Sure, you might have issues with why we're in the war, how we shouldn't go to war and all that. But look, man, this is a long time coming. A U.S. Navy fast attack submarine sank an Iranian warship in the Indian Ocean, marking the first time that an American submarine has sunk an enemy combat vessel since World War II. Secretary of Defense Pete Hegseth made the announcement during a Pentagon press conference Wednesday morning. And quoting Pete Hegseth, an American submarine sunk an Iranian warship that thought it was safe in international waters. Instead, it was sunk by a torpedo. Quiet death. The first sinking of an enemy ship by a torpedo since World War II. And like in that war, back when we were still the War Department, we are fighting to win. American submarines were devastatingly effective in World War II, sinking more than 1,300 Japanese ships. Wow. The largest of which was the supercarrier Shinano, sunk by USS Archer Fish in 1944. American submarines continued sinking Japanese vessels until the final months of the war. But this Iranian ship was struck by a single M48 torpedo from a Navy fast attack submarine. Other strikes targeting Iranian infrastructure and naval vessels are forthcoming. So far, over 20 naval vessels have been destroyed since the war began Saturday, along with 2,000 other targets. We are hammering the hell out of Iran, guys. Hammering the living hell out of them.
Been resolved and greatly impacted oil prices back in 2022 and inflation as well.
Yeah, if for nothing else, just from the news cycle, if we're any representation, Bloomberg News in this radio program, we've obviously been spending almost all of our time on the geopolitical front talking about Iran, not about Ukraine. And that is an issue for that whole part of the world.
Yeah.
And for our European allies and so on and so forth. So we'll see how that plays out. But again, the focus of the U.S. right now is on
up
Iran.
Almost 10%.
So
Damn,
I
Robinhood.
guess just on the
Slow
update
down,
this
baby.
morning, a sense that things are generally going pretty well.
Ark
Looking at
Invest
oil,
up
I think
about
oil is another
5%.
thing that's going to be that has
Bitco,
impacted and will likely continue to
BTCO,
impact just kind of the broader risk
up 5%.
Marketplace out
UVIX
there. We're seeing
is
some,
down 5%.
I guess just stabilizing here, down about 1% for WTI and Brent crude here, just kind of not giving any of it back, but certainly not rising any further. And that you mentioned some strategists are calling out $100 on Brent is a number
That's
that
supposed
really
to be
gets
the
your
pain
attention.
point. Exactly. Yep. That's the only kind of level that has been associated with negative equity returns over the subsequent 1 year period.
I'll tell you, Alexis has been reporting on the price of gasoline. Up 21%, 20 cents just over the past couple of days.
Just over the past couple of days. So we're really seeing the impact just overnight. And you have to wonder, though, is that just them preemptively, sort of raising these prices? Because it doesn't hit. It takes days, if not weeks, for the price of crude, a jump in the price of crude to make its way to the gas pump. Yeah,
it's interesting there. And I just think, if I'm a political advisor to the president, I'm like, the last thing we need is for gasoline prices to go up as we go into the midterm elections.
Exactly.
Because
he was
that's
just
where we
talking
see
about in his speech recently in his State of the Union, wasn't he saying that the affordability fight has been won? Yeah. Yeah, not so fast.
Yeah, so that's kind of, I think just as consumers in general, that's one of the places you really see it is the price of gasoline, the price of fuel for those people that are, like, unlike us here on the island of Manhattan that don't drive that much. The rest of the world, it really matters.
Yeah, and even though we've been getting these headline inflation figures that are kind of ebbing, we still talk all the time about how consumers are feeling the pain of inflation on everyday items when they're going grocery shopping. A lot of costs for them still very persistent. So. Yep.
Well, we saw the ISM services number today came in the highest since June of 2022. Prices did moderate too, so that's a good data point today for the U.S. economy and the U.S. consumer. So we'll stay on top of that as well. S&P up 0.5%.
It looks like the Ayatollah's son is now in control. My prediction is he'll die like a dog, just like his father. I mean, we already killed the other guy that took the Ayatollah's place first. He was dead within 6 hours of becoming the new leader. And then we attacked where they were all convening and trying to decide who the next leader was going to be, and blew them to hell. Sorry, I know it's not polite to laugh at the demise of people, and it's a shame that these people have to die. But theocratic nonsense has no place in government, over there or here. Religion and government do not belong on the same page. That's when you have things like Iran. Over time, these things become radicalized. It doesn't matter what religion the country is. If they involve it in government, it will eventually decline into what you've seen in Iran the last 40 years, the oppression of women mainly. So to see them liberated, I mean, if you haven't seen the videos of these people celebrating in the streets and the women crying in happiness over being able to walk around outside with their face exposed, not having to cover up like some kind of... It just blows my mind why anybody would support such an oppressive regime. Like most of the people out here protesting now are only out here because something Donald Trump. They don't even understand what they're out there protesting. They're just mad because their guy ain't the one doing it. But guaranteed, if Kamala was in office and she did the exact same thing, you'd see the other side protesting and bitching about it. I mean, not as much. You wouldn't see as many conservatives protesting. You'd still see a little. You'd still see Fox News complaining about it in some way. But that's the media's job, to piss you off. It's not their job to give you, the news anymore. It hasn't been since Ted Koppel was around. All right, we're looking like we're having a fairly green day. Bitcoin running back up to about the 72.5. Silver struggling to come back up. It's not going to come below this here mark. I mean, it could. It very well could. If that RSI doesn't pop and stay up, that average needs to move on up above 40 and 50. NVIDIA knocking on 183's door. It has some strong support. Apple bouncing around a little bit. What are they doing lately? Robinhood killing it today. Crude oil dancing around the $74 area, largely because of the dollar. What it's been doing, it's relatively up. Looks like it's coming back down, which is, according to the last guy we heard talking, is good. I am no expert. I do not claim to be an expert. I am fallible, just like everybody. So I will not act like I'm an authority on any of these topics because you know what? I don't like being wrong. But when I am, I do my best to learn from it. We are looking great so far. Look at that. Last 24 hours. Crypto across the board averaging up about 5 to 8%. Just look at that. Looks like something out of Interstellar going down, doesn't it? Just in the last hour, though, we're looking a little flat. 4 hours looking pretty good. What's our biggest jump in crypto today? Look at that. Luxury travel token up 170%. Congratulations if you have any of these. Well, what you are seeing a lot of, though, as we scroll down, Buttcoin, you're going to see a lot of tokenized stocks. A lot of companies getting in on a blockchain and putting their stocks on the blockchain. I'm not seeing it too much today. Look at that. Coinbase's tokenized stock up 20%. Another Coinbase tokenized stock. You're seeing a lot of people doing this lately. A lot of companies. AOL, get the fuck out of here. You're seeing a lot of companies tokenizing their stocks. And that is the future, buddy. I'm telling you. DFDV tokenized stock up 15%. Robinhood tokenized stock up 15%-ish. MicroStrategy's tokenized stock, both of them up 13.5%. You're going to see more and more companies tokenizing their stocks. Because whether you like it or not, blockchain is such a beautiful technology. It is definitely the future of finance. We collectively just need to understand it a little better and use it for better things. You know, crypto got a bad rap because of the whole NFT thing when that happened. When people were trying to sell pictures and NFTs, and it was such a dumbass thing. it really discredited the entire blockchain crypto space and provided excellent ammo for the crypto naysayers. But this is what we do. We develop a technology, and then we dick around with it until we figure out something, a utility for it that's actually good, right? But insurance companies and smart contracts and all of that, that's definitely something that's going to improve our economy, the speed of our transactions, whether that's money or just processing information. Blockchain is going to speed all that up. The more and more mainstream adoption we see, that's the way of the future, like it or not. Let's see what Bloomberg is saying.
They want to make their products for people or organizations. So that gives me comfort. So the market goes up, the market goes down. I know these companies are working for their clients and their shareholders, and that's what gives me peace at night.
Kim, Goldman Sachs CEO David Solomon today said that he was surprised by the benign reaction in markets to what's going on in the Middle East. And I have to say, it feels like the market reaction to everything that's happened this year has been benign, from Venezuela to Greenland to AI disruption. And we're just stuck in this range on the S&P 500. What gets us out of there, either to the upside or to the downside?
Oh, wait a minute. What's his face saying?
Satan and their analogy and their misguided religion. And there was no way to appease them. In defiance of every American president since Jimmy Carter, the Iranian regime has pursued the means to acquire a nuclear weapon so that they could take that madness and that ideology to its full conclusion. Everyone, regardless of political affiliation, should be able to agree that that can never happen, should never happen. President Trump exhausted every diplomatic channel to this end. He tried. They've been over backwards. Since March of last year, he directed his administration to initiate 5 different rounds of negotiations with Iran's leaders. Most recently, and along the way, they've offered sanction relief, normalization, and most recently they even offered nuclear fuel for life if Iran would cease its domestic nuclear program. And they were rebuffed. Iran said no. Why? Because we all know why they were enriching uranium, and it had nothing to do with medical devices and energy supply.
Man, no kidding.
It was to kill their enemies, and the U.S. was at the top of the list with Israel.
Dude, in Iran, they had
Well, Iran
billboards
dragged its feet. Its leaders
all
pressed
over the
forward
country
with its nuclear
that said,
ambitions.
"Death to America."
They were stalling because they wanted to kill us. They continue to advance their conventional
Iranians
missile
news
systems
full
at
of
a speed
America,
and a scale
full of propaganda
that
against
greatly
America.
outpaced our regional allies' ability
Some of
to
it pretty damn
respond.
funny, actually.
That is what made it imminent. In short, the situation was untenable. We had our personnel, troops, citizens, installations, and assets in harm's way. And through this operation, President Trump took decisive and defensive action to ensure the safety of our forces, our citizens, our allies, and our homeland. In my estimation, this course of action was necessary, lawful, and effective, and reversing it now would weaken America. Congress has a constitutional right to exercise its oversight authority, and we will. But we also have a duty and obligation not to undercut our own national security. One last note, there's a misconception that Operation Epic Fury is in any way a diversion from Republican demands for peace. It's the opposite. Peace is not secured through appeasement. And it's certainly not secured by airdropping billions of dollars on terrorist regimes, which is what previous Democrat administrations had done. Peace is secured through strength. That is the principle that our party has stood for my entire life, and on principle before that, articulated the idea of peace through strength. That's what this administration is demonstrating, and that is why America is the last great superpower on the planet, and all freedom-loving people around the world are grateful to God for that. Let's talk about DHS. It's been mentioned
Let's
this
leave
morning.
God
If
out of the
we're
argument,
being
okay?
wise, now is the time to be vigilant at home and to ensure that all of our doors are locked, so to speak. Obviously, everyone understands that. It's a heightened threat environment. Global tensions are high, threats are constantly evolving, and America's adversaries are watching for any sign of weakness on our part. We cannot show them that. And yet, all this is happening. We have Democrats running around here playing political games in Congress. It's infuriating. They've shut down the very agency that is responsible for securing the homeland. The Democrats have shut down the agency responsible for keeping Americans safe. Unbelievably, they've already instructed their members to block funding. They sent out a whip notice to tell House Democrats, to instruct them, to give them the order to vote down Homeland Security funding. That's a bipartisan consensus bill that had already been prepared by the House. It will be on the floor tomorrow for yet another vote, and you better watch that board, and everybody in America better watch that board. Anybody who votes to block funding for the Homeland, it is shameful. I don't know how else to describe it. It speaks to a long record of Democrats' deliberate efforts to undermine America's safety in the essential operations of DHS. We all remember that under Joe Biden, Democrats opened wide our nation's border for 4 catastrophic years. They allowed hundreds on the terrorist watch list to cross a border illegally, and unwittingly they released 2.2 million known gotaways into the interior. We have no idea where so many of those people are. These are individuals who entered our country illegally. They were detected by law enforcement, and they evaded capture. We don't know where they are. We don't know what they're doing or what they're plotting. And we pray that we can find them and apprehend them. Keep your head on a swivel. CBP figures show that the number of Iranian nationals, entering our country illegally rose precipitously under Joe Biden's open borders policy. During that period, at least 1,500 Iranians crossed the U.S. border illegally, and over 700 were released into the country. Now, the 1,500 number is not an accurate assessment because we frankly have no idea, because they weren't even keeping track of so many of the people coming across who evaded capture and evaded notice because the border was wide open. So we don't know. We don't know how many dangerous people are here, how many Iranians who believed in that ideology of the Ayatollah who now is buried. Think about that. Over 1,500 Iranian nationals traveled multiple oceans to enter the U.S., not through legal ports of entry, but unlawfully at our border. It's just a small sample of the mess we inherited from Democrats with their radical ideology and the mess that President Trump and Republicans are working in earnest to clean up so we can save American lives and protect the homeland. And now we have, look, DHS is not just ICE and CBP, It's so many agencies responsible for keeping us safe. You're talking about the Coast Guard, you're talking about FEMA, our cybersecurity infrastructure, our counterterrorism coordination. All of that is at stake right now, and the Democrats are going to vote tomorrow not to fund those operations. Just think of that. Massive mission-critical functions, especially right now. And the military action in Iran makes it all more urgent and crucial to have a fully funded, fully staffed DHS across all its departments. They cannot argue otherwise. It's madness. As members of this body, our first and most basic duty is to ensure the safety of American citizens. Maybe that's why they sat through that line at the State of the Union. They're more interested in protecting illegal aliens. They see that as their first responsibility. There's no other way to explain this. If they ever want to correct the impression that their party prioritizes the welfare of illegal aliens over the welfare of American citizens, tomorrow would be a great place to start. But they, again, have sent out a whip notice instructing Democrats to vote down Homeland Security funding. I had to drop the mic right here and walk out of this room. That's all you need to know. But I'll take a few questions. Chad.
Thank you. You obviously don't think that the president needs an authorization from Congress for war. But do you think if this goes south after a while, and Democrats are going to have a vote tomorrow in the House, try to engineer a war powers vote tomorrow in the House, that could be a problem for Republicans this fall if there is public sentiment against the war down the road?
Look, we don't make political decisions at a time like this. We're making decisions that are necessary to keep American citizens and troops safe. That is the first responsibility. Unlike the Democrats, we don't sit around in a back room and decide what's politically expedient. We do what we must do to protect the homeland, and we let the chips fall where they may, and to protect our interests, to protect America First priorities and principles, and that's the people of this great country. And so I trust the American people. I trust that they will evaluate all these things, and they will understand that this administration did the right thing. I think they'll reward it politically, but if people get a bad taste in their mouth for what happened back here in the first part of the year in Iran, they just do. But we know, and history will record, we did the right thing. I think passage of a war powers resolution right now would be a terrible, dangerous idea for all the reasons I've just explained. It would empower our enemies, it would kneecap our own forces, and it would take the ability of the U.S. military and the commander-in-chief away from completing this critical mission to keep everybody safe. Iran has attacked 3 of our U.S. embassies in the last couple of days. Okay, those are sovereign territories of the U.S. They have declared war on us. I don't believe in the semantics. We've talked about the language this morning. We're not at war right now. We're 4 days in to a very specific, clear mission, an Operation Epic Fury, which has 2 components, as you know, that we have articulated over and over. The President has, the Commander of the Joint Chiefs, everybody has explained. 2 points. We had to take care of these ballistic missiles that they were producing at such a rapid pace that our regional allies could not keep up with. We had to ensure that they can't fire all those barrage of missiles at our people, our troops, our assets, our citizens in the region, and our installations. We're taking that out. We had to. It's a defensive operation. And secondly, we had to take their Navy down. That's effectively what, in layman's terms, that's what's happening right now. That will be done quickly. As they explained this morning, we're, I think, hours away probably from having full operational control over the skies over Iran, which means that this mission could be completed quickly. We expect that it will be. And then we will hope and pray that the Iranian people take this moment of opportunity, rise up, take their country back, and that freedom can flourish there for the first time in generations. Yes.
Mr. Speaker, thank you so much. Some of your members, as you know, Congressman Davidson included, oppose this Iran operation, which the President himself has called a war. Are you confident that you have the votes to defeat the War Powers Resolution tomorrow?
Yes, and I had a discussion with Congressman Davidson this morning. He's a dear friend and brother of mine, and we, iron sharpens iron. We disagree on issues, and we have those discussions. He and I have done this a lot. He said this morning in front of all their House Republicans he's not yet sure how he's going to vote on the War Powers Resolution. I believe we have the votes to put this down, and I certainly pray that's true. Because, for all the reasons I said, it would put the country in serious harm, and it would certainly jeopardize the lives of our troops and all those who were involved in making these great sacrifices to defend us. We have to put this down. Money.
You said on Monday, talking about the start of this war, you said that Israel was determined to act in their own defense here, with or without American support. You also said if Israel fired upon Iran, they would have immediately retaliated against us, personnel and assets. But the President said yesterday that it was him, it was the United States that might have forced Israel's hand. So why are you and the President not on the same page?
We're on the same page. I'm not at liberty to say publicly much of the classified information that I get in all these briefings, and that's always the delicate part of this, because if we say too much, then it reveals methods and sources, and it eliminates the ability of our extraordinary military and intelligence community to do what they do. The President has explained his analysis and his thought. Obviously, Israel is a close ally. They're in close communication. But everything I've said and everything he said is all true. They're not inconsistent in any way. Israel saw Iran as an existential threat. We should have seen them as well. But they were they were literally a neighbor. So if Iran said publicly, they all told us why. Okay, if they had the ability, they would wipe Israel off the face of the earth. That is why they were trying to enrich uranium. And even though we took out the nuclear facilities several months ago, they were still working on their nuclear ambition, even through the negotiations, as I said. And they were producing missiles at such a rapid pace that they were building up an arsenal that would have done untold damage to Israel and other neighbors there, right there in the Middle East. So Israel saw that as an existential threat. Bibi Netanyahu has explained all this publicly. He's stating the obvious. Everybody knew that. They saw a moment of opportunity. They had to act in their own survival, and we knew and understood, and this has been explained by the Secretary of State, the President, myself, and everybody else. The unclassified part is that if this kinetic activity began, then Iran was determined to hit us, our personnel, our assets, and all that. If the Commander-in-Chief and his administration and our officials waited for all those casualties to be exacted, they would have been drug up here and put through an inquest like you've never seen before, because the Democrats would have had a field day and said, if you had all that exquisite intelligence, why didn't you protect us? So it's a no-win situation for them. That's what the President and everyone has tried to explain. There are different ways to explain it. It's all the same truth. None of that has changed. It's entirely consistent. Last one. Yes, sir. Last, back row.
President Trump said this is expected to be a 4 to 5 week campaign, but that he opened the door for potentially longer than that. We heard several of your members yesterday coming out of briefing. Some said they support the engagement now, but that, that may change if this ends up being something that drags out. If we're sitting here 8 weeks, 10 weeks down the road, and this is still happening, would your position, at least on a war powers resolution, change?
But look, I'm not going to get into hypotheticals. What we need to do right now is stand together as a country. We need to stand with our brave servicemen and women who are in harm's way, stand with the president on this critical mission to keep us safe, and we will do that. Congress will do its job. We will perform our oversight responsibilities, but the first duty, as I said earlier, is to keep the country safe, and that's what we're focused on right now. Thank you so much.
Supplemental funding. Has the Pentagon
And those were House GOP leaders there giving remarks amid heightened awareness here in America when it comes to security as the conflict in the Middle East does continue. We also heard them speaking about this partial government shutdown that is affecting DHS as well. And thank you so much for joining us. My name is Christy Matino. We are going to step away for a commercial break, but on the other side there, I do want to take you back out to Washington, D.C. as we're listening in to day 2 here of DHS Secretary Kristi Noem as she is testifying. That's next. You're watching live now from Fox. Welcome back. We are going to take you back out live to Washington, D.C., where yesterday we saw DHS Secretary Kristi Noem testifying. She is there now again for day 2, so let's head over and listen in.
Last week at Columbia University, where 5 DHS agents conned their way into a university-owned apartment building at 6 a.m. They were pretending to be police officers searching for a missing child. But this was nothing more than a ruse to gain access to the apartment of a student originally from Azerbaijan, Eli Agayeva, a senior studying neuroscience and politics. A public security officer on the scene asked for a warrant, but none was produced, and they proceeded to arrest Eli. It is black-letter law that a government agent cannot lie about searching for a missing child to gain entry to a residence. Okay. It's literally the example they give in the criminal procedure textbook. But your agents deliberately misrepresented themselves to gain access to Ellie's apartment. Fortunately, hours after Ellie was taken into custody, following a public outcry and a
Yeah, okay. What's Yahoo
About
Finance
72. I'll send it over to Ross Mack.
Whoa, hold on. I need to run over to Bloomberg.
Naval
Explosion.
assets. We've seen significant additional strikes against ballistic missile launchers, especially the medium-range ones. So I think there is progress. The nuclear sites, look, I think it's a little bit of a harder question. The Iranians said in June that they were opening a new site. It is buried incredibly deeply. We still don't know where the 440 kilos of highly enriched uranium that were buried at Fordo ended up. So I think there's still some questions on the nuclear side, more so than on the conventional missile side or the conventional arms side.
Jonathan, how far do you think this could go here? Is regime change on the table for this administration? Because if so, that could spell a whole new timetable.
Bitcoin.
Yeah, look, when you're getting to the point, I
73.
think, Paul, that a lot of people are having a hard time with, which is
believe
the
it's about
goals
to happen.
still are not clear. Despite, Secretary Rubio, Secretary Hegseth again this morning, President Trump all saying different goals, the problem is we don't really know what they actually are, and so therefore what the endpoint would be in leading to potential off-ramps. And I think the markets are calculating that in as well. Look, regime change is clearly the Israeli preference.
I tried to wait a little longer.
They want to end up
before I take a
For the
smoke break.
US
Here I am, an hour and 15 in. It's been an eventful morning so far. I'm having a good time. I'm going to go for a smoke break, but I'm going to leave you with Bloomberg in the meanwhile. And I would love to leave up Bitcoin, but I think I need to leave up the heat map. I think it's fairly obvious that Bitcoin is doing well. Overall, up about 5 to 8% across the entire crypto space. Robinhood still up. Apple down a little bit. Nvidia plowing up as it usually does. Bitcoin knocking on $73,000. Gold dicking around. Silver. It might be about to come down into this area of support right here. Well, it's only in the 80s. It very well could come through that. I hope it doesn't. But as long as the dollar is performing like it is, and the dollar's on its way back up, that might knock silver back down. If the dollar continues to go up, and if it goes up above, if it plows through this next little resistance line, I do believe we're going to see silver fall below this support. These things are related. Duh. This is the life of Bitcoin. The entire lifespan of Bitcoin. Well, not the entire lifespan, because it starts back in... Oh, wait a minute. Wait a minute. It still isn't... Okay, cool. Huh? I love TradingView. TradingView is so awesome. This is the life of Bitcoin. It is a beautiful thing to behold, is it not? Can't compress it any further. But these swings. Keep in mind, if you're a Bitcoin investor, the higher Bitcoin goes, see, people love to make a big deal out of a $20,000 drop. And yes, while that is a big percentage of Bitcoin, the last major crash, it's damn near come down by 50%. As Bitcoin climbs higher and higher, we're going to see bigger and bigger jumps up and down. Once Bitcoin gets up to like $500,000-ish, it's going to be wild. The money is going to be wild. It's not going to be a poor man's game for very long. So if you're not in on Bitcoin now, you're going to miss the boat. And guess who's going to hold the majority of it? Institutional investors, which isn't necessarily a good thing. The people need to own this. So I encourage anybody to load up as much as you can on Bitcoin and just sit on it. If you can manage to sit on Bitcoin for 3 or 4 years, you will have a return on that investment. Not financial advice, but you get what I'm saying. All right. I'm going to leave you with Bloomberg, and I am going to have a smoke break.
For this conflict, Jonathan, do you agree with that estimate, and what is the likelihood it could be much longer than that?
Yeah, the honest truth is, I don't think anybody knows. And part of the problem is because we don't know what the goals are, it's not clear how long it would take to get there. A 4 to 5 week estimate is probably reasonable if you're saying we really want to fundamentally diminish Iranian naval assets, its standing military, destroy, maybe besiege the Revolutionary Guard's internal security forces headquarters, go after more leadership targets, diminish the nuclear program, ballistic missile program. Then sure, 4 to 5 weeks based on the number of targets the U.S. might have left makes sense. But I can't preclude the possibility that, look, it's a little shorter because the Iranians really come to the table. I don't think that's likely possible. And on the other side, it absolutely could be longer if the Iranian regime ends up having a strategy that they fire back more.
Jonathan, thanks so much. We really appreciate getting the benefit of your expertise. Jonathan Panikoff, he's the director of the Scowcroft Middle East Security Initiative at the Atlantic Council, joining us via Zoom from Washington, D.C. Markets holding on to the gains here. The S&P up 40 points, the Dow up 200 points, the NASDAQ actually up 255 points. That's 1.1%. We'll stay on top of these markets for you. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Alex Semenova sitting in for Scarlett Fu. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube and Bloomberg.com as well here. I guess, Alex, looking at the oil market, we'll call it stabilizing. I don't know. I mean, kind of flattish today, which is good. No more panic buying that we saw over the last couple of days. Let's check in with Mike McGlone, Senior Commodity Strategist for Bloomberg Intelligence. Zoom from Chicago? I'm not sure if that's correct, but we'll see how it goes. All right, very good. I don't know what he's doing in Chicago. He's
Not sunny
supposed to be in
Florida.
Miami Beach. I mean, come on. Mike, just give us your sense of kind of what we saw in oil over the last several trading days and how you think it might trend from here.
So, Paul, I have the honor of attending the all-day agriculture outlook in Covington, Indiana yesterday. And
nice.
They have, exactly. So I'm in Chicago office today, but we in the Midwest have the same problem we have with crude oil. Massive oversupply from the U.S., and we have a situation where the leader of the world's largest energy producer, net exporter of crude oil and natural gas, wants lower prices for midterms. He's going to get them. So that, to me, as I look at this, is a classic peak kind of sign. So we've had key events to push prices up. A colder than normal winter pumped up natural gas. It's already collapsed. And then the first ever closure of the Strait of Hormuz. How long is that going to last? So you have to think to yourself, how are things going to look by the time we get to midterms? And I fully expect the whole situation in Iran will be subdued and we'll head towards lower prices. And a good example, if you look at Brent, it made a new high above last year's high around 85 yesterday. But that December contract, which will be front month right before the midterms, is running around 70. And it's probably heading towards 58. A good example is December last year went around 65, and that was before the U.S. Subdued Venezuela and Iran. So to me, this is a classic peak, potentially in oil, unless something really goes bad with the war.
Mike, I'm an equities person, so I'm going to ask a stocks question for equity investors here. From a commodities perspective, Paul and I have been talking about how $100 a barrel seems to be the pain point for equities that Wall Street keeps citing. I know we're ways away from that right now, but what is the possibility that we could see those levels? Is that kind of off the table at this point, or is that something that you're thinking about at all?
I am, but you only hear those risks when we get kind of typically when it's time to sell. Those are usually sell signals because what's it going to take? A potentially significant military shutdown by the enemy, Iran, of the Strait of Hormuz. Right now it's shut down by insurance companies. Within a couple days, that's probably going to be completely alleviated and we'll go back to the trend. The key thing to remember is the Western Hemisphere is the price maker now in crude oil. Massive excess supply from the U.S. and Canada, running close to 8 million barrels a day of surplus supply versus demand. And this spike is just going to accelerate that trend. So you need some kind of sustained supply curtailment in the Middle East, which is unlikely. Otherwise, the trend usually ticks back lower and potentially starting today. So look at the fact is by the time we get to midterms, is it going to look like this? You know, we've had 5 decades of war gaming for the world's largest military to handle this situation. If it's not a good situation, the Trump administration in midterms are going to have a big problem. I think they're going to be able to say, yeah, that one's done. And maybe even leadership in Cuba has fallen after Venezuela, Syria, and, and Iran. You see the trend?
Mike, you said you're in Covington. Yesterday you're in Covington, Indiana. So, of course, I Googled map it. We're talking the absolute middle of America, right between Peoria, Illinois, and Indianapolis. So we got to go. You're probably the only guest we can talk to and say that just went to an ag conference. What are the farmers telling you when you spoke to them yesterday? How's the farmer doing? What's the outlook?
Well, that's the wonderful thing about Covington, Indiana. There's only one place to go, and that's the Beef House. I've been going to this conference for decades. And people who wear overalls are very friendly, typically. The key theme is massive supply. Brazil is every other word, most notably Brazil. We have to find ways for demand, which typically means biofuels, which is part of that energy pressure factor, because that means more and more supply from U.S. biofuels. Ethanol, E15 going that way. They need something to support the prices, which is what we're probably going to be talking about with crude oil by the end of the year, because it's just a massive oversupply. The wonderful thing is called superabundance. It's just bad for farmers to make money.
Mike, we always appreciate what an expert you are on a swath of different asset classes, from gold to natural gas to oil, and Bitcoin is also something that you're an expert in. So I have to ask you, looks like it's rallying toward 73,000. Is this finally the breakout that investors were hoping for, or what's driving this rally?
I doubt it. Bitcoin's in a bear market. Initially, in the beginning of the year, I thought it was a worthy short around 94. Now it reached good support around 64. I think the first good resistance now to test is around 74. It has to stay above that level, but it has a key problem. The whole space is heading lower. There's an unlimited supply of cryptocurrencies. Mr. Trump probably put in the peak, and the bottom line for these highly volatile risk assets to go up is NASDAQ volatility, basically near a 10-year low, has to stay low. And to me, it's the risk of all that volatility in commodities and crude oil and precious metals trickling over to the stock market. And that's bad for cryptos, most notably Bitcoin.
Hey, Mike, what are the farmers telling you that you saw yesterday? Are they getting aid checks from the government? Is that really? And is that that's got to help them out, right?
It helps them, but they hate it. They said, yes, we're going to cash our checks. I mean, no denial, but they're so honest about it. We would much rather have higher prices so we can produce and make a decent profit. It's what they want to do, and they all love, corn's been the key place to go, but they don't like it. Also, they point out it brings on more supply in places like West Texas, where they probably shouldn't be growing too much corn. It means, to me, the problem is we probably have to find that low price cure before we find a bottom in prices, which I think around corn is around $3.50.
Right.
And I've been pointing out in crude oil for almost 4 years now, that low price cure might be around 40.
Yep.
And these aren't profound. This is usually where it happens.
All right, great. Mike McGlone, thanks so much. Appreciate it. Senior
All right,
commodity
I am
strategist Mike McGlone. For our listeners in the U.S., a reminder, you can...
Thanks for hanging in there. Hey, I've got some news. Visa and Bridge, a subsidiary of Stripe, have announced a major expansion of their stablecoin linked card program, aiming to roll out to over 100 countries by the end of the year. That's pretty good news for crypto and Bitcoin. As we can see, we've got a pretty green day. Not bad. Pretty green across the board for stocks and crypto. Bitcoin, boom, busted through that $73,000 mark, on its way up to 74. We're definitely going to hit some resistance at all the psychological milestones. 73.5, 74, then 74.5. Those are going to be our major resistances. As you can see, war is good for the economy, isn't it? Our dollar, which is performing rather well overall, it's down right now. But since our dollar was depegged from gold, what is our dollar backed by now? I'll tell you what it's backed by. It's backed by war. Nvidia doing all right for the day. Apple looking like it's struggling to get back up to where it was. Robinhood doing exceptionally well today. Silver and gold you can expect to dance around as long as the dollar is doing this. They are inversely related. When you see the price of silver, not the value always stays the same. When you see the price of silver going up, it's not the value going up, it's the value of the dollar going down. So as the dollar declines, silver will go up. Here lately, we're seeing a little bit of a retraction from that norm because of industry. As the value of silver, as the price of silver goes up, it's not going to slow down the industrial investment side of things. They're still going to buy it because they have to. It's just going to make the prices of the goods involved, like computers and stuff like that, chips, it's going to make all the prices of that stuff go up. But nothing ever comes down, does it? So as silver becomes a little cheaper for the day, it's going to cause these companies to place more orders to try and get in before it goes too high. So it's a good time to get into silver futures, in my opinion. Not financial advice. Drop a stock pick in the comments, and let's check out whatever you guys want me to check out. I'm not going to be on for too much longer, just because there is a bandwidth cap where I'm at, and the woman that I'm living with is nice enough to allow me to blow her bandwidth out of the water. I've raised her bill more than $100 because she had like a 500 gig limit, and I blew it out by like 4 or 5 terabytes. So they charged her the maximum amount, $100. So I had to give her $100, and I have definitely not made $100 by doing so. So not exactly a good return on investment, is it? But she's been nice enough to allow me to continue my morning live streams. So I'd love to stay on all day, but I have to cut it short here in a little bit. So drop a stock pick in the chat. I would be glad to take a look at something, anything you want. Doesn't seem like too many people are participating in the chats on YouTube or Rumble for that matter. But I still appreciate you watching. Still appreciate you being here. That's my phone that won't shut up. Dollar doing well. I'm telling you, it's a largely green day for America. Let's see. Just out of curiosity, how China's doing. Woo! China's having a red day. As I said, war is good for the economy. That applies to every country. China is an ally of Iran. Will China enter this war? We better hope not. We don't want a war with China because, in my opinion, the only way to stop them if they do happen to attack us is to give them a little taste of Japan. We don't want that to happen. We don't want nukes to be used. As soon as one person uses them, that's it. In fact, that's why nobody has used them, because everybody has them. So we better hope that that doesn't happen. But if it does, to say it will be interesting is an understatement. Let's look at all U.S. companies. It's not just the NASDAQ, not just the S&P, not the Dow Jones. This is all American companies. Look at that. Just look at that. It is a good day to be a company in America, by and large. There's still a lot of red, but overall, it's a good day. Looks like the bloodbath from yesterday is over temporarily. I do believe this will be short-lived. We're going to have ups and downs. Tomorrow will probably be red, especially if we don't continue to do well in this war on Iran. I'm scared to say it, but I think I think we hit the bottom on Bitcoin. I hope I'm right about that. I hate being wrong. I don't see this running way up here anytime soon, though. I do believe we'll probably have a look like this. Follow the mouse. It's going to do this right here. It's probably going to take another 3 or 4 years to get above the last all-time high. That's providing it stays predictable on that 4-year cycle. Looks like the dollar fell through that little bit of support. But that just could mean that the support was a little lower than the predictive models, because it came back up. Ooh, it's about to make a double bottom. Dollar's about to come down a little bit. That's going to make silver and gold come up a bit. We don't, according to that last guy we saw on Bloomberg, we don't really want the dollar to come up to this $100 mark. It's a long way off. But if that happens, that's going to be a hell of a signal. I thought I had an inflation map pulled up. Let's see. The inflation month over month is at 0.2%. Year over year from the Bureau of Labor is 2.5%. And from the Bureau of Labor Statistics, it's up 2.4%, down 0.3%. So inflation is coming down. Those are the numbers. You can believe it or not. It's best to look at these numbers here rather than to listen to the talking heads on TV who have agendas usually in the media. Doesn't matter what side of the aisle you're on or what side of the aisle they're on. I've noticed, though, that a good rule of thumb is, while all major American media outlets, well, all across the world is full of propaganda. Every country has their own bit of propaganda they throw in their news. But when there is a Republican in office in our country, you can pretty much rely on the conservative news sources to report accurately, more or less, more than the liberal media side. when a Republican is in office. However, when there's a Democrat in office, you can pretty much believe most of what you see on liberal media, and you can pretty much count on the conservative outlets to be the most propagandized. So you should rotate your news intake, and you should probably take in more than just one or two news sources, and more than just the mainstream news sources. That's why YouTube and Rumble are so great, because it allows you to see things from around the world. I encourage all of you to check out news sources of all sorts from all countries that you can find, because it'll really help you get a better scope of what is actually going on versus what some of these media outlets want to push. They all have a narrative. That's just the truth. So your best bet is to take in all that you can, and try and disseminate the facts from all the information that you can find. Well, if nobody has anything, I think I'm about done here. Bitcoin is doing rather well. Looks like it has to consolidate a tiny bit. As long as it stays along that trend line, I do believe we're going to continue to go up. As long as the dollar stays about where it is, dollar goes down, Bitcoin and silver and gold go up. Let's see, the biggest loser in crypto today, Tomcoin, whatever that is. It's a sub-penny coin, down 85%. Rug pull. See what the biggest gainers in the crypto space are. Luxury travel token, up 171%. Congratulations if you have anything to do with any of these coins. But if you notice, not very many of them are something I'm familiar with. I don't recognize any of these. Buttcoin is up 36%. And Bitcoin dominance remains on point. I have yet to see a decent indicator for altcoin season. So that actually, Bitcoin running up now could be a good indicator that we're heading into altcoin season. Some people would disagree with that, I realize. I still believe we are in basically a bear market in the crypto space for Bitcoin. The all-time high is behind us, and it'll likely take a couple of years before we cross that again. Anything can happen, of course. So keep in mind, when you take in all this news and information, there's no such thing as an expert in the crypto space. It's too young of a technology. I don't care if you got your 10,000 hours. It's still too young of a technology. I'm going to go to Bloomberg and see what this dude's saying.
We might have to raise rates. They're not advocating raising rates, but what they're saying is we should tell the markets that this is a possibility so we don't get a one-way trade. And that's kind of what the minutes were saying. Now, obviously, minutes are now 4 or 5 weeks old. And that's very much in the rearview mirror because of everything that happens on it.
Sure is. Let's see what Yahoo's saying.
Most of the rest of people don't feel great about it for a lot of different reasons. And so, when you have altmen, I think it feeds into the narrative of sort of these big evil tech overlords who are doing what's in their own self-interest, but not in what's in the interest of humanity.
Yeah, that's why I actually think the public and the Pentagon are on the same side in that sense, because obviously there are many officials within government who are not elected. I mean, Pete Hegseth was not elected. But
yeah, no kidding. That's the way we do things.
Released offenders with homicide charges or convictions, and I'm going to highlight just several examples. Rami Jalal Naisan, an Iraqi national with 28 arrests. Chicago ignored 3 ICE detainers. 15 of his arrests occurred after the first detainer was issued. Waldemar Zibik, a Polish national convicted of attempted murder after stabbing his wife and daughter, was released despite an ICE detainer. Alexander Pascual Pedro, arrested for aggravated criminal sexual abuse of a child, released despite a detainer, later convicted of solicitation to meet a child, and then arrested again for domestic violence. Ismael Gomez Urzua, Deported 4 times, 3 detainers ignored despite arrest for narcotics, fleeing police and weapons violations. Dennis Humberto Navarrete Romero, an illegal immigrant, was arrested for many crimes but released into the community repeatedly. He went on to allegedly rape a woman on a trail in Fairfax County. Abraham Gonzalez, Venezuelan gang member, arrested in Denver for aggravated assault, motor vehicle theft, and felony menacing. Denver gave ICE only 1 hour's notice before forcing officers to arrest him in a public parking lot where an officer was assaulted. Those aren't policy disagreements. Those are public safety failures, a willful desire to hold the community or put the community in danger. Beyond those individual cases, we've seen tragic losses around this country, not just of the Angel families here today, but Laken Riley, killed by a Venezuelan national unlawfully present in the U.S. Rachel Morin, a 37-year-old mother in Maryland, raped and killed by an illegal alien from El Salvador, later convicted of first-degree murder. Jocelyn Nungary, 12-year-old girl in Houston, sexually assaulted and murdered by 2 Venezuelan nationals unlawfully present in the U.S.
These are facts some people don't like to admit.
And we could go on and on. So, Madam Secretary, what is the value of an ICE detainer, and why is it such an important public safety tool?
Well, a detainer that we would lodge with the local law enforcement jurisdiction.
What do you think about
lets them
Christina?
know that when they are going to release that individual out to the public, that we would like
Comment
to take
what you
custody
think
of
on
that.
her.
When we have detainers that are honored, we can go into a courthouse, we can go into a jail or a prison, and in a safe environment, take custody of that individual, take them to a detention center, and remove them to their home country. When they don't honor our detainers, that individual is released out into the streets. And what we know for a fact is hundreds and hundreds of times, thousands of times across the country, those individuals reoffend. And what they're doing by not honoring detainers is creating more victims.
When ICE issues a detainer, you're not asking local officers to conduct immigration sweeps in neighborhoods. You're requesting simply notice before release or brief lawful hold so you can assume custody, right?
That is correct.
If ICE is requesting a short hold, that means that the individual's already in state or local custody.
Correct.
And individuals in jail are there because there was probable cause for arrest, and in many cases because they've been convicted of crimes, right?
Correct.
And so when these sanctuaries policies are enacted, they put the community at harm, they put your agents at risk, and even the perpetrator at risk. And Mr. Chairman, I'll yield back, but I have some UC requests.
Gentleman's recognized for UC.
Thank you. Radical rhetoric by sanctuary politicians leads to an unprecedented 1,300% increase in assaults against ICE officers and a 3,200.
Yep. Let's see what's going on with Bloomberg.
Prevent anybody from getting refunds. But if the refunds go ahead, then it's who gets the money and how far down the chain does it go? I don't know if Abercrombie imports their own stuff, but if they don't, then what are they being charged by the wholesalers, the middlemen between them and the boat that comes in? That becomes the issue. You've seen some retailers come out and with ads that say, we're going to give you your money back. They give it to us, we're going to give it to you, the consumer. It may be a safe bet because they may not get it.
I mean, this
themselves.
is a bookkeeping nightmare.
All right, guys, that's going to do it for me today. Thank you guys for showing up. I will be back tomorrow. As usual, what I like to do is I like to start up the stream and show the heat maps around 8:30-ish, 8 somewhere in 8 to 9. I'll pop that up, and then around 9 to 9:30 is when I get on. So I can get y'all familiarized with the stock market, and you don't have to look at my ugly mug while you assess the heat maps and what's going on in the news. So let's recap just a little bit. Dollar is on the decline a little bit, which is probably a good thing. We don't need it to get overheated and pop way up. Stock heat map, we're looking fairly green across the board. I mean, with stocks and crypto. War is good for the economy. What can I say? Bitcoin knocking on that $73,000 door. It already busted through, but it's the next time it goes up, it'll probably push through the 73.5 line. Nvidia having an okay day. Apple not so much. Robinhood killing it. Silver's probably on its way back up as the dollar continues to come down. And oil dancing around the $75 a barrel mark. we can probably expect, I would say, in the fairly near future, we can probably expect oil to go up and prices at the gas pump to go up. If you're old enough to remember 9/11, you remember what happened. At first, gas prices came down. It was great. Oh, it was so beautiful. 79 cents, 89 cents a gallon. Those days are long gone. We will never see those prices again. Sure would be nice, but I doubt that'll ever happen. But what happened soon after they came down? It shot up to its highest ever of like $4 or $5 a gallon. At least where I was living in Atlanta. It was way more expensive on the other side of the country. But, yeah, we're probably going to see something similar. As oil comes down a little bit, we'll see gas prices come down. But I do believe ultimately we're going to see them go up if this war in Iran goes on any longer. But if the death of the Ayatollah happening less than 24 hours after we had first attacked Iran is any indicator of how things are going to go, we are hammering the hell out of Iran right now. I think that's a pretty good indicator of how things are going to go. But that's how it needs to go if we're going to attack Iran at all. We can't let up. As soon as we let up and show their allies a shred of weakness, they might decide to get in the game. Their closest allies, as everybody knows, is China, Russia, and North Korea. North Korea has already said that they can handle everything with one missile. What do you think kind of missile he's referring to? One with a nuclear warhead on it, most likely. I think Kim Jong-un is itching to throw a nuke out there. Their news is hilarious. If you can manage to get a hold of some of their news is hilarious. Talk about propagandized, Jesus. Throw a stock pick in the chat before I go, and I'll be glad to look it up for you. Heat map looking good. Overall for the day. Last hour, things are starting to come down from around the board there. But overall, we're still doing well. Crypto's looking excellent for the last 24 hours. Looking red for the last hour. Looking red for the last 4 hours, really. But still, overall, Bitcoin is up almost 6%. Ethereum pushing 7%. You've got others that are higher and lower. Some coins I've never heard of. Chainlink up about 6%. Cardano up 3%. God, I remember when Cardano hit $3. It needs to run up again. Solana up about 5%. XRP about 5%. Binance 3%. Tron 2%. Dogecoin pushing 7%. I am happy to see crypto doing so well because I have got a bag from hell. I bought in at about 95. Did not expect it to come down, and I'll be happy to admit I'm no expert. And there are no experts in the crypto space.